Start my stream. Okay. He doesn't have to. He doesn't have to turn it down. Good morning. Looking like a squeeze this morning. Passing above the kind of the important creek we talked about. Everything looks okay on GME. So far, so good. Always nervous about a gap up because of implications of that, but just want to see if it can keep advancing. Got two targets on the board. One's around the 29 level. The other's up here at 31. For AMC, needs to continue above really this 548 level again. So still sort of stuck in the mud here, but if we can get the 548 support, should see it run. Could be as simple as this though, sort of like the secondary action I talked about yesterday of if you break up, you might push resistance and then need to come back down. I mean, went right to the intersection, right in that pocket. So right to this like a cross trend, which is good because that advancement means that you're obviously trying to advance. I don't know how well this is going to work out for us. We'll see. Could be a big day. Costs? I don't know about costs. It didn't look like it was in a position where it was ready to squeeze, but it looked more like it was in a bottoming action still. But I mean, I didn't really look at it up close. I just kind of looked at the big picture yesterday for costs. So it's possible that it's turning or something. I'm going to try to keep my eyes sort of fixed on AMC and GME this morning because they're tempting breakouts here. IWM hit 220, so it made the move. We talked about possibility of an extension up to 220. It's honestly just kind of keeps going. I don't know what exactly to say about IWM except this at this point. So I actually got out at like 218, which is fine. I'm not lamenting that or anything. It technically could run really far, because the supports and resistances after this level here are pretty high. But I'm going to just say this. IWM on the 4-hour with extended trading, it has never been this overbought. Let me repeat that. On the 4-hour extended hours trading, IWM has never been this overbought since it's in 2013, creation date or whatever. So like, I just want to put that out there because where we're hitting right now is a kind of like was like the extension target that I had, and this is historically like never been seen before. I went back and I was like, surely there's maybe during the last COVID run up, when it really pushed, maybe it got overbought. This is as overbought as it got. It was like 84. It's never been above 90. Then October 2017, it got close. I mean, I just kept going back. And there's just nothing. Like, I mean, at least back to 2013. I mean, I could, probably like mess with the chart and look at like the daily or something. But with extended hours on, that's as far back as I can go on the 4 hours. So that's a big deal. I mean, that's a long time. That's 10 years. So in the last 10 years, it's never been this overbought. So that's a very, probably a really important thing to keep in mind on IWM. I don't know exactly what that means. You know what I mean? It's just like, how do you interpret something that has not happened before? You really can't, other than just to say like, clearly there's a ton of people buying it. So yeah, so what we're gonna look for on AMC, there's a number of things that could happen here. I think my expectations were that we probably wouldn't just breach 548 and run. If you were just to ask me like, well, could it happen? Yeah. I mean, anytime you kind of push above a support or a resistance level and you turn it into support, it's support now. In theory, there could be a buy wall here and then you push up away from 548. You never go back down through it. Most of the time, what I'm looking for with these kinds of moves is I'm looking at that cross trend here, and I'm looking at this as a wave out. So do I think that the wave out has been met? Possibly. It's possible because, again, like I drew a couple different ones here, and there's even another one over here. And we could look at all of them, and try to figure it out. There's a lot of them. And I think this is a tricky one because of the shape of it. It's really bizarre, this bottom. But I would probably say that somehow it's this and this, or the two bigger M crosses, because we know that there's a creek in the middle. I have it drawn in red here. Don't really have it drawn at all on this side, but I would say it's probably there. Probably kind of pushed out a little bit. And then that would be like the middle of this wave down. And so then for the wave up, what I would look for is, for lack of a better way of explaining it, kind of like bottom to top. And there might, again, be more than one way to kind of do this, but I would say that for the most part, I would be looking at this guy probably. So I don't know. It's hard. This is a tough one. Normally I can find them pretty quickly. Let me look at this chart. Because it already hit kind of the first one I had, which is right here, that intersection. But I think there might be a higher one. Usually there's a possibility it could continue to run. If this goes parabolic, it's just tricky to find the right one here because of the way it built out. Yeah, I mean, that really looks the same. I don't really know. Maybe this guy right here. It looks like a set of parallels, perhaps. Yeah. So, maybe. I mean, the big thing is, like, if we can find support above 550, we should just go. We talked about 548 a lot. And I don't see why we wouldn't just hold it and take off. If we can't find support here, I don't think it's the end-all be-all. I think we might end up coming back down. I didn't have any real concept that there would be some kind of a gap up here yesterday. I just sort of drew what I thought should happen if it goes up. In terms of like a right side. Again, waveform, right? So you have an up, a down, an up. Usually there's a retest back down. But it could be that this happens like way up here, This could squeeze really high and retest really high. I don't really care that much. I'm just looking at where the major creek is. And the creek is low. And there's no doubt in my mind we didn't check it. We just kind of jumped over it. So it is what it is. So I would be looking for some kind of a very clear, evident backup. It's just me being conservative about it. Looks like we got a little one right here. So you see how wicked back down to 540. So maybe, I don't know. it opened high and it came back down to like 540 and then it pushed back up again. So it's possible that was it. That could have been the only back test you need. In which case all of this already happened, but it's like hyper compressed. So it's a little confusing, but if we looked at like the 1 minute, you probably see it. Actually, nope, don't really see it. It just kind of opened right on the creek. Well, never mind. I thought it went back. It did go down, but it didn't go back there. Okay, so looking okay. So from this point forward, anything below the main creek body here, which is, you know, this predominant diagonal from the first and the second wave here. So really it's all one wave, but from this to this, anything below that is probably going to be a bit more bearish because you basically have now extended above. So it would be like a breakdown. But if we can manage to hold either the creek or 548, right now we're at 547, then you could be in for a really good move today. So we'll see. GME, kind of the same deal. It's sort of pushed up high. Currently it's come back down below. This is another chart that I was kind of like yesterday belaying the point and just saying that like I didn't really feel like there was a strong definite answer, because I could see how it could come down and fill the gap at 2450, and it could still do that and manage to advance, but all the same it's kind of like we may go up first. So I do have targets up to $31. My understanding is that there's a whole bunch of stuff that could run into the money at 30, so folks are thinking that they're gonna prevent it from going over 30. You know, it wouldn't be hard to do if you're just trying to get a sell-off here, and that's the point of this upthrust. You could just sell back down, all the way back down through to the low gap at 24 something, and then you'd be stuck down here for a couple days, and then by Friday you wouldn't be breaking out in time. But just on the whole, we just look at levels. This is advanced at this point. So even if it comes back down and fills the gap from this morning at the 2690 area, it's up in a new range. So there is a concept of like distribution where you're pushing up into a new range, and then if you're coming back down through it, that could be highly distributive. So you just got to be careful of like what you wish for kind of things, because I think that it'd be better for us at this point to not do that. And I'd even made a case for it yesterday to like you could push way up and then come back down low. But in reality, is that the best situation to be in? No. It adds a lot of question marks to the whole thing, and you don't want to be in that situation if you're a bull trader, because you're like, well, now I'm stuck thinking about this or this. And we cross that bridge when we come to it. We don't have to like go through every scenario or something. So right now, what I'm looking for is that if it fills the lower gap or the higher gap today around the $27 mark, that it doesn't go back below it. And then ideally, you can see this trend that I have on the chart. Maybe better for me to zoom out a bit so we can see it a little bit better. So this is just one of many fans that you can draw that are basically going back to the bottom that occurred on the 24th of May. And that was going into that big 4-day weekend when we broke out, I think, on a Tuesday. And what I did is I drew a parallel, or not a parallel, I drew a fan from that point, so a trajectory out, that represents what I think could be the actual quote-unquote floor for this wave, because this would be a break below it. So this is an early test on June 25th. This would be the break below it, the gap down, and then this gap up could be the break back above it, in which case you could see how this upper little doodle that I drew would be kind of similar to what we saw on the left side, because you would have like kind of this breakout, and then you would hold that level potentially, and then again, I mean, it might be pretty fast, but you would hold that level potentially, and then you could see it break out again and really move for real. I don't know exactly how that might play out like locally. That's more of a question in my mind. I don't really know if I care that much either. But 28, this is the drop off point from Monday the 17th. So, when we look at this stuff, it's always important to note when these cat ears form, it's a consolidation, right? So there's some kind of a liquid level right here that we were wrapping around earlier, and we very, very often will drop from those levels heavily in the distribution cycles. So that is going to be a pretty important region for us to get above today. So I would say it just so happens, I think it's kind of by design, that it's on that fan as well. So really want to see GME hold above 2850s today, ideally. Even if it goes back down, it'd be good to have it come back up to above 2850. So yeah, we left a gap. Gaps are usually filled on AMC and GME. They're often filled, but does the gap here break any kind of a breakout? Yes and no. So there's like, on AMC, there's a higher creek that when we pushed up yesterday, I said it didn't really look great because it pushed up above resistance and then it dropped back below. But it does push the creek up. So we actually kind of opened right on top of that one today. But going back down to fill the lower creek, would that completely break everything? I don't think so. I think it's possible. It may not be as likely, but it's possible that you can come down here to like the 535 region, fill the gap, and still have support, because technically you're not breaking back below this resistance that we were kind of pinned underneath for several days. So any support at 532 or above that 532 is good. That's what I'm trying to say. So thanks for the cryptic message, Glenn. Well, at least he sticks to his guns. Someone bought 5 million shares of AMC. I mean, unless it was like a buy up that kind of ate up a sell wall, should have moved something. I always question like after hours price moves, but I mean, in the grand scheme of things, like AMC may have an average 28 to 30 million day or something bigger than that, and it doesn't do a whole lot. So it's not usually a big deal, 5 million. I mean, it's not a huge number. Well, he's not really been explaining anything. Last time he was here, he said, a long time ago, he said we wouldn't, and then he disappeared for a long time. He said we wouldn't go back over 5 until October. We've been over 5, obviously way earlier than that, in May. So I'm not ragging on the guy because he's had some good call outs in the past. But he has. I mean, there's no doubt about that. But I'm not really a big fan of the drop in, plop a cryptic message, and then leave. I don't even know what's the word for something like that. I don't even know what the word is. Yeah. Well, anything above, like I said, anything above here, if we can kind of hold, is good. We're still not really finding a lot above 548. So once again, kind of sold down through it, and then we've rejected on it on this candle. So really need to start seeing that change. I'm not very bullish on AMC immediately until we get above 548. I've been saying the same thing since last Tuesday, last Monday really, but last Tuesday especially. That is a key level. And then I'm going to zoom in a little bit more on GME because I want to see this a little better. I don't know. No, it's not the word I'm looking for because, like, it's like when, I don't know, it's like an archetype, like a character archetype, like he sees himself as like a mystic or something. I don't know. That's a really weird thing to say, but like this idea of like special knowledge, I guess. A guru, I don't know. Like I have special knowledge that you don't have. And I'm dropping this knowledge like in weird hint like ways. I had a guy that came onto our Discord a long time ago, like a year and a half ago. It was the other Discord group. And he was like that too. He was like, I have the special knowledge and I know the answers. And you get those kind of folks and then they give you like pieces of it. And then they never give you like the real full answer. I know you're still there, Glenn. I hope you're listening. Again, I'm not ragging on you, but you did say we weren't going to be over 5 till October. And it went way earlier than that. So, whatever, I think he was using like some kind of a special level 2 data that was able to show like some bigger things going on behind the scenes. And it was legit. It was working, but it worked mostly on like short time frames. From what I recall, I don't really remember there being like a whole lot. Yeah, so this is odd. I don't really know what to make of IWM. If you guys are still in it, go ahead and ride it as long as you can, I mean, it came back in extended hours and touched 218. So it's not impossible that this thing just continues pretty far. I mean, I have another resistance up here at 227, but it's well beyond like the targets that I had. My target was like 216, 217 with an extension to 220. And we're at 221.40. So again, if you're riding it up, like enjoy the ride. I'm out of it for now. I mentioned it first thing on the stream. I don't really know what to say about it except that when I went to I went to 4 hours extended hours trading, and in the last decade, that's 10 years, it's never been this overbought. Like never. It's never come above 90. So I find it to be a bit odd that we're really like churning it up here at this 90 mark and not really making any pullbacks. There's been lots of divergence on lower time frames, and I've largely kind of dismissed them because I said, well, they're there, but IWM is probably going to keep running. I mean, they were there right at the first day. So then the second day, you're like, okay, it's still divergent. The third day, it's still divergent. So RSI is not like the end all be all. And I would say like right now, if you were looking at the 4 hour, you might say it's like a very minor bearish divergence because it's very flat and the price has been rising. Volume as an indicator is important too, and volume, I'm trying to frame the screen. Volume has been dropping pretty steadily. So as an indicator of volume itself, again, I would say IWM has been losing momentum, but it's definitely in like a squeeze mode. So at this point, I really think that it could end up going all the way up to 227 and in just that squeeze mode mentality. It's not, I'm kind of shrugging my shoulders because I don't really know. It's like trying to catch a knife, I guess, in reverse. I'm just looking at it from the point of view of like, okay, if it's really not going to stop, the middle could very well be that 214 area. And I think 227 made sense to me because of the fact that basically goes through the previous range in 2021 all the way to the top. And so that would give you a pretty solid like move all the way through that top range. And hey, that happens, kudos to those who said it was going to go way farther than I did, because I didn't think it was going to go farther without some kind of a backup here to the creek. But it has so far. Again, the only thing I can really say is like it's uncharted territory, and that's not really my opinion. It's more of just the fact of the matter. At least in the last decade, I was surprised to find that in even going back to like the COVID run, it never got this overbought, which is kind of interesting. It's a very unique run for the Russell 2000. And I'm not going to say it's the run of a lifetime, but it's a big deal, It's just jumped some pretty major creeks and it's advancing as like an SOS would. I'm just curious where the top is. So, yeah, I got nothing else to say about it. If it keeps going, it keeps going. I'm just stating like, here's what I'm looking at. It looks like it's never been to this kind of place before. So I don't know. Don't know what to expect. There's no precedent, I should say. Like what happens when it hits, XYZ? If it's like never done it before, you don't really know what to say. You're just like, well, I guess we'll find out. Maybe it'll keep going. Maybe it just ignores that and just squeezes through and that's that. One heck of a move. I mean, I got out at 300% gain and 600% gain, which is pretty huge. If I had held, it probably would be like 800 or 900% gain right now. I mean, that's a big move. So again, like if you're in it and enjoying that, then just enjoy it. I'm going to try to focus mostly on AMC and GME today because they're in a really pivotal spot where they need to hold some support or else they're probably going to come back down. And, retesting the gap from this morning is not a huge deal. So if you're just tuning in and you're wondering, like, what happens if we gap fill? I don't think it's that big of a deal. Obviously, you're crossing back down underneath some stuff. Like on GME, there was this rising wedging motion. It's pretty minor, but it's there. And we would have to drop that if we went below, for example, like 27.35 or something. We would be dropping beneath that. That could provide let's call it like a ceiling if we were to drop beneath it. And that could be maybe perceived as bad or negative. The move to the upside was always a possibility here, but it needs to hold kind of where it's currently at. I mean, it really is this battle of, I would say 28.10. No, 28.12. And if you need that level, you can go back to the drop-off point, and this would illustrate exactly what I'm saying is like, just go back and look. This is a very important level. I mean, it really started back here, frankly. Way back here on Monday the 3rd. And you can see how it's been respected. And where we've kind of lost, when we've lost it, we've had really big drops. And when we've held it, we've had really big runs. So very important level that we're kind of sitting on in this little area. I wish I could be a little more precise with it, but I guess if I had to pick, it'd be between 28.26 and 27.73. Maybe I'll just put both on there. Yeah, those are the two that I would pick out. I'll just say 28. Let's do 28.28. It's easy to say. 27.72. That's fun. There we go. Doesn't it have to be more precise, Booksy? I don't think so, because like every time I wick through these and hit them, it's always like slightly different. I'm sure there's one number that hits more often, but if you're just looking for like an average, 28.28 is a good number. That's a good average number. And I think that the low end on that matters as well, because that acted as support and resistance as well, and that's 27.70 area. So being kind of stuck in the middle of the two right now means that we're basically in a spot of possible indifference, like we don't really know. So as soon as this makes a move above or below one of these guys, I think you're going to have a better indication of direction today. You're like, well, the indication's up. Yeah, so what happened early this morning, this is a 15-minute chart, so it's got a couple candles that are finished. And you can see what happened. Basically, it bought up high, and then it closed below. So it pushed up through the resistance and then came all the way back down and closed below. And not only did it do that on the level, it did it on this ascending fan line, which I'm using because I think it's really important that we get above that. And that comes back again from a bottom back in the May or something. Way back here, May 24th, this guy. And to me, that indicates kind of like this is like the spring-like area, right? Where you're dropping beneath a support and then you're running it up and you're going across the creek. The creek being the lower creek here, which is like this guy, right? And you're advancing. It's really lower than that, sorry. You're advancing over that creek low, and then after you've jumped it, now you're coming back up and retesting certain levels, and ultimately like that trend was lost here when we dropped off on I guess it was Monday the 1st. Kind of dropped straight off of that, coming off of a Friday. So I'd like to see it, if that gap up is sort of, let's just say, symmetrical, I'd like to see it come back above and make a big push. And I've been talking about maybe hitting 31 today. It may or may not get there because there's a downward facing creek, which is the massive wedge, potentially. I say potentially because we haven't had a third hit on the top, but it's like this huge wedge, and that's the red line coming down. So that one is maybe an interrupter. Like it might, if it went straight up like right now, it might just hit 31 and not go any farther. So I have a green box above here at like 31 to 32, but that might be a little too far. I'm not sure. We'll see. I don't know if it's going to respect it. But that's where I would put it, right? So I'm just saying like this pocket right here. If it were to go back down, pretty simple. You would need to see it reject off 27.72 and then not find support, but reject off of it. So that's after it came below it. And then it looks like it's trying right now. And then if it rejected here, I think you'd head back down and test this level and then the gap. I'm not super concerned about filling a gap for these, just in case you're wondering. So in the grand scheme of things, this is kind of where the rubber meets the road, as they say. Like, if this gap matters because it's a big bullish breakout, then you won't come back down and like just break down through and keep going down. Then we would just interpret it as what we would call an upthrust, which is it opened and closed beneath the resistance. I would say that that usually doesn't ultimately matter that much unless it's a daily candle. I would say maybe the 4-hour, maybe the 2-hour candle. So these otherwise are kind of thought of as minor moves, because your institutional traders, they don't trade these low time frames. Like, they don't trade a 15-minute time frame. They just don't. They're not interested in that. You might say, well, hey, if they're not interested, why even bother? You know, why even bother looking at this time frame? Because, you know, we've always talked about how there's market manipulation and this or that. Yeah, there is. I think that that's where we get to see iteration, which is this idea of like you're copying on a smaller scale the behavior of the larger scale, and it matters. So if you do look at the smaller time frames, just keeping it in perspective will help. But it's not that it's not important. I don't want to say that. It's just that if I'm looking for like, hey, I think this is distribution, I would want to go up to the 4-hour and daily and see what happened. Because that kind of a candle move on the daily would be a far greater confirmation. Because that tells me, like, big picture wise, that's probably what's happening, right? Right now, all I could say is that in the 15-minute time frame, it was distributive. But we already know that, like, because you can see it came right back down. I think I said it like right off the bat, like, hey, that wick above isn't exactly great. I always say stuff like that on this stream. Oh, the wick above and the candle body below is not always great, but it's dependent on the time frame. So if you're somebody that's looking at a chart that's 15 minutes and below, just remember, like, the gut instinct that this isn't the best is probably a good response, but like, things can change if the larger time frame follows through in a different way. So it can completely erase it, because we haven't even had an hour on the charts yet. We've only been open for like 39 minutes. So if in the next 21 minutes it pushes all the way back up, well, you would have a very different looking candle on the 1 hour, right? And then suddenly it's like all this little bitty stuff just looks like filling out of a larger picture. So just keep in mind, like, it does matter, and it definitely is volume dependent as well. So if this is high volume, and it is, I would probably look at it more seriously. It's a high volume candle, this very first opening candle. Yeah, and then in the grand scheme of things, it's one of the higher volume candles we've had in the last month. So it's a big deal. It's just not all there is to it. Let's go to the hourly. We'll just take that. Yeah, so see right now, that 15-minute is definitely reflecting something that we're seeing on the hourly, which is this really high candle wick, which is showing that it bought all the way back up, and then that was absorbed all the way back down to some support level or some other level, if it's not support. And right now, I think our estimations were right, because the 2772 seems to be where we're kind of stuck. We've been trading here for a while, and the open and close are right near it. So we were looking back at that earlier. I think we picked the right one of the right ones. So we'll see. So this could change pretty dramatically on the hourly. So we'll have to check back at the end of the hour and just see what it looks like. See if it looks really negative or if it kind of looks better. Same with AMC, you know. Yeah, it looks like it already went and tried to fill its gap. So that's okay. It really is. That's actually not bad. It's probably a good thing, because I don't really want to leave that gap there. but it needs to hold. So we're getting really close. I think we've got maybe a couple more pennies. Let me double check. It went to the top of the candle, but I don't think it went far enough. So the close yesterday was, God, the chart just moved over. That's funny. Close yesterday was 534. The close on this candle, and then it opened at and went low to 540. So the close on this was 534. The low here was 536. So not a huge deal, but it left a 2-cent opening, I suppose. Some people think that that doesn't matter because they're like, well, if you look at like the hourly, the wick went down to this wick or something. Like, I know that that's a thing. Like, some people will trade based on different time frames, these gaps. What I like to do is look at the closing value of the last candle that I have, and then if I can go down to 1 minute, I'll go down to 1 minute, maybe look at that, and then see how low it came, because that to me tells me that like that's where the price closed. So wherever it closed, then when it reopened, that should be where the gap is. And then you can look at the lows or the highs depending on the direction of the gap to see if it's filled. But I've seen a lot of people make arguments that like the gap fills on the hourly, it's good enough, and because the candle might look different. I don't know. That's not the way I do gaps. And I feel like they've been pretty precise about gap fills. So, anywho. Could this still be bullish? Yeah, it could be. I'm not saying it is, but it could be. There's a decent possibility here that we could catch a bottom trend. There's a couple different trends going upward at the moment. And I think that the last known trend, the one we had Monday going into today, probably be the one that I would pick. So if we were to fill the gap, and even if we were to go lower, there's still that lower trend. You know, there's still 532. So it's definitely not done yet. Like if we went down and filled this, and then we started sticking it out sideways, this to me would be potentially okay, as long as you recover back above, you know, kind of where we are now. Yeah. So I don't know if it's I don't understand why there's a lot of debate about it, but I'll talk about it. I just get a lot of people debate with me about it. So what I do is I go through and I think about closing value and opening value, because that to me is the gap. Like the trading that happened after hours happened off of the close and into the open. So it shouldn't matter what time frame you pick, because the closing value for the last hour should be the same. So like if I go to the hourly candle, it's just a big giant wick. But if I go to the hourly candle, it should still show me the same closing value as the closing value of the day, you know. So if I look at the candle value, and I'm looking up top usually, you could probably have this stuff display on the chart, but I don't. So if I look up top, it says closing value is 534. It's that simple to me. I mean, if I needed to look really close, I could just go look really close. It's still going to say, all right, that's the most recent candle. It's still going to say 534 because that's the closing value. Well, that's where the gap starts, because then everything after that was extended hours until the opening value. So then the opening value here is 541. So from 534 to 541, you have a gap. However, you have to also look at the low, because it didn't just stay there. You can see there's a wick down. So within the first minute, we filled 1 penny of that gap, because we opened at 541 and then dipped to 540. So the gap currently would stand at 534, which is the closing value, to the low value of 540. And then later it goes lower, and you can keep watching it, see how low it goes. But some people, I don't know exactly how this happens. It's not happening today, but some folks will look at this and they'll say, like, let's say, for example, this is probably a decent example. Both of these closed at 534, right? So let's say, for example, it was this previous candle right here, right? Some folks would say that that is filled because it came to the top and it overlaps the same period. So they would look at the wicks on like the hourly and say that the gap is filled. I don't personally understand that. I don't think it's filled unless it's filled to the penny, but some folks will look at that and they'll see the overlap and they'll say it's filled on the hourly. And I don't know. You know, maybe that comes from a different line of trading. Maybe that's just the way people visually see it. I don't really know. That's the best way I can describe it. Is like they would look at the overlapping wicks and say that it's closed. Or let's say the candle body closed low and this goes down into the candle body, but the close was actually way down here at like 529. They might look at that and say that the candle bodies are overlapping. And that could be true. The candle bodies could be overlapping, but the closing value could be the low end of the candle, for example, in this case, because it went up. And then the candle bodies are overlapping and it looks closed. You wouldn't know unless you look closely at it. And then you would say, yeah. I don't know. I like to be really precise about it. I'd rather just know exactly what the opening and closing values are and just go from there. And I don't find that there's any real benefit to guessing or like kind of estimating on the hourly. I don't know. There's some times where I'll look at something like this and I'll say, is it close enough? Maybe. If it were something like IWM, would I care? No. You know, I wouldn't care. I would be like, who cares? There's gaps on IWM that have never been filled. Tons of them that have never been filled. Ever. Like, go back to, again, the last decade, you'll find dozens of them that just never got filled. But this is not an ETF. This is AMC we're talking about. So, like, I'm like super precise with it because I think you have to be. What's the theory of why they fill by the algos? It's a liquidity thing. So institutional traders, the algorithm trades based on, you can call it like mileage if you want, but you know those guys that go through neighborhoods, and you might be one of these guys, I don't know. But you know these guys that go like door to door. I'm not talking about like Mormons, but I'm talking about like, you know, like insurance salesman or something. Like they're going door to door, and you can think of them as like the algo, and they have to cover like every neighborhood and every street and every house, right? Like they don't just skip willy-nilly. So if the boss tells them you're going to do this neighborhood, the expectation is that they're going to do the entire neighborhood, which includes every street and every house and even every apartment if it's an apartment complex, you know what I mean? So the expectation is they're going to go to every single door. Weird analogy, I know, but I honestly think that's exactly the way liquidity is meant in the market. So like if during after hours trading, most of your algorithmic movements are not happening unless, again, there's some kind of a plan to use a gap or to trade after hours for some particular reason, which happens, and we see it with high volume. And that's when I pay attention the most to after hours trading, when there's like extremely high volume. Because a lot of times I don't think they're trading very much. They're just kind of like keeping it in check. It's just sort of like a, hey, let's just keep this level and that's it. And you open at the exact same level. There might have been some trading, but it was really just kind of pinging back and forth. Solar guys, yeah. Well, liquidity exploration is just like that, though. Like Wyckoff talked about it hundreds of years ago before people were using, 100 years ago, before people used algorithms. He's basically just saying like liquidity exploration is this idea that they're going to check every level to see how many, every penny basically, as small as that might seem, as insignificant as that might seem, they're checking liquidity levels. Some of them are less significant, like you're passing through them. You're not really like trading them very much. And we see it on the chart all the time. We'll pass through a liquidity level because we've already traded this area. So like, for example, right here, we heavily traded, you know, this region, you see the chop. So we heavily traded from 528 all the way up to 540. Well, if you want to then go back down and trade below 528 again to go check it out, you're not going to slowly chop back down necessarily. You've already traded it. Instead, you just sell down through it really quickly. You bypass that region that you already traded, and then you go low, and then you can trade it once again lower right here, right? You see that? This is like natural liquidity exploration. Gaps are not natural, so they don't include the market on the whole. They don't include dumb money. 99% of dumb money isn't trading, meaning the retail trader, right? That's the way they would look at us. We're not trading during after hours trading. So unless the goal is to ultimately like trap some shorts or trap some longs with a gap, usually you're going to come back down and you're going to trade that gap level because you don't want to just leave it behind. You want to see what shares can be bought and sold there. And that's why when we talk about breakaway gaps, that's why it's so significant, because a breakaway gap is a high volume move away from a level where you have no desire to come back down because the markup is happening, you know. And in that case, the markup starts happening. They don't come back down to explore liquidity. So when I always talk about gaps, those are the questions that I ask. It's not theoretical. It's not me. I know somebody said I was rambling about nothing yesterday. It really isn't rambling about nothing. It's a question of, do you think there's a good reason to come back down there? Like we made this gap down below at 506. If the volume had continued from that 506 gap and just kept pushing and didn't get kind of stuffed here at 550, I think you could have argued potentially that that is a breakaway. And you can see that we heavily traded beneath it. So there's another argument that like, well, we did a lot of trading beneath there, and maybe we don't need to come back and fill that gap because there's no need for liquidity purposes. That's the debate. I don't know. You know, sometimes I would agree with that. Sometimes I wouldn't. Do I think it's been satisfied? Maybe. We pushed out of there pretty fast. We probably did all the trading we wanted to do, at least at this time. But then I can zoom out, look on the whole, see if it makes sense. Other times we trade a floor, and that ends up being a floor for the purpose of a spring later. Because it could be that, yeah, we heavily traded here at 503, but it could be that we did not heavily trade at 490. And even though it might seem like these big volume bars are actually like a lot of trading, they're not. Usually the lowest amount of trading that's happening in a range is happening along, what's going on here? Yeah. Usually it's not happening right there. So you see how there's a high liquidity trade right here now? This is the volume by range. You can see where the liquidity gaps are. There's one right above and below that level. So the answer is, well, why is there a gap there? It might be because of a liquidity desire to come back later. Like, let's go ahead and test resistance and get a sell down started and a distribution started so that we can then come back below. We don't always know. It could be that sellers were trying to push down here at 5. They couldn't do it, so they take the price back up. And this is part of the algorithm. It's like almost determinism at that point, because maybe it happens this way every time. They expect there to be like, you know, liquidity tests that fail and then they go back up and whatever. Could be that the desire is not actually to trade 5, but to trade around 5, you know. And that gives you a completely different picture of like, well, crap. Well, then where would you be going? You know what I mean? And is it to get a retest at 484? Yeah, potentially. You know, we talked about coming back down potentially to hit that level. It's a liquidity center for the range. This would give you like an adequate reason to have a gap to entice retail. It's not necessarily about that liquidity that the algorithm is like going for that liquidity. It could be that they're going towards that because they want to trade around it still, and then use it as kind of a way of maybe doing a greater, buy-in in these low regions that they didn't really trade previously. There's a complexity to that, and sometimes when I'm doing, it's not always. I wish I could tell you that I'm always conscious of this, but sometimes I am. And when I'm looking at these levels, I'm looking at where would you maybe trade the most. Like right here, I wouldn't really expect to trade very much in the range that we're in. We spent a whole lot of time trading here, last week. So like, it really doesn't make a lot of sense to trade in this area, which is why I would put like tops and bottoms where I put them, and that would make sense. Like, yes, you might trade a little bit more above and you might trade a little bit more below that range, but then that's about as far as I go. And I wouldn't put a lot of chop here. It really just depends on what you think about the desired outcome, basically. So I don't suspect this gap level has to create this kind of a pattern. It's just an idea, right? And it's like one of those things where you're looking at it from a helicopter view and you're like, sure, I could see it play out that way. And a lot of times those gaps are built on like shelf levels for that purpose, because they create like a shelf, push away from it, and then you come back down to that shelf and you build another base and then a spring. And a spring is almost always like a dip into a low liquidity zone off of like a shelf floor. Almost always. Like I would say always, but I don't want to use a universal term. Like you're almost always dipping low into some low liquidity area when you're doing a spring from some high liquidity region. So that's where I would kind of hang my hat on that. Yeah, same deal. I think I just answered your question, fidget spinner. I think you're more likely to get a gap down or a gap up on a support or resistance level than anywhere else. Because if you think about it, the whole idea of a gap, especially if it's got high volume, means that you pushed away from something. I don't know if that's a perfect rule, but I would say it's probably just more like a common sense thing. Which is why I usually mark gaps, just because I'm like, yeah, it's probably a level. And usually there's a good reason it's there. I've been talking a little bit about MPW here and there. I've been looking at this as a good play. But look, I just want to illustrate what I'm talking about really quick. The gap levels that exist, there's one right here at 485. There's another up here at 550. There's actually another one below there as well. These are tops. This is a resistance level, and it gapped down from it, And usually the gap is happening in correlation with some other breakdown. Like this one I think is breaking like a trend here, right, as well. But yeah, like naturally that's also a resistance level. So yeah, often they mark off those things. Is this gapping away from a support or resistance? Yes. And it actually gapped up to it, gapped through it multiple times. Got 1, 2, well, maybe 3 actually. 1, 2, 3, 4, 5 gaps around 482, on MPW. That's not surprising because it's a strong area of support and resistance. But it also just depends on the chart. Like MPW has a lot of gaps, frankly. I mean, it just does. Maybe more than like an average chart you would expect to have. Does GME have a lot of gaps? Not really by comparison. We've got a couple right now that are local and a couple below. But, if you're just looking at this chart, it looks pretty connected for the most part. There's little gaps here and there, like I said. A lot of these have already been filled. But like lately, with all this chopping action, there's not that many that don't get filled like immediately. AMC is kind of the same way. It's actually pretty solid overall. I mean, if you look back, there's really nothing aside from this $5 gap that hasn't been, and the one way down near 3 that haven't really been filled. So I think there's another one way up high. There's a gap up here somewhere. I don't remember where it is. That hasn't been filled either. I should probably know that number, but I don't know it off the top of my head. It's one of those marks. I think I had it on the other chart. It's probably 755 or something like that. So, yeah, I do think they often mark off levels that are important. But it's not like a one-size-fits-all rule either. I mean, you could go crazy with it and mark every single gap you want to mark. I don't think they're all equally important. I can't see any gaps here. It's probably would be on a smaller chart if it is there. There is a gap down here at 548, but that would have already been filled. But that marked off like a really important level for this range that we've respected ever since. Actually, it's probably right here. If this candle closed high, it could be up at 690. Closed at 688. High of 660. So yeah, there's a 688 gap. Yep, there's a 688 gap. Way up there. Anyways. Yeah, I mean, so naturally, those are possible support and resistance levels. But like I said, I don't really feel like that's always the case. Like, we've had little gaps here and there. Like, there was a gap over here on July 11th. And I mean, did it mark off like a possible support level? Sure. It really ended up being like a liquidity grab because we came back down and we kind of shoot across where the gap was. But do I think that 522 is the most important of all the levels? No. It was one I had on my chart for other reasons. You know, we created a support right on 522 when we came up in July. It was more of like a B level support, you know, like A team, B team or something. So, yes, gaps are important. The reason I don't like them, when I say I don't like them, is usually because there's a problem. Like, so right now, going back down to fill the $5 gap, why would that be a problem? Because we just advanced. So if you make an early advancement and then you've left a gap behind and then going back down, especially depending on where it is, in this case, we didn't make a higher high. So that could be a benefit to us. But if we had pushed up, let's say we pushed up to like 577 and we were way up here, would I want to then come back down and fill the $5 gap? No. Why? Why does it matter if we do it now or later? Because doing it now, we're still within the range. We could make a dip. We really haven't done anything to push the resistance. But if you push the top here and you create a distribution to take you all the way back down, you're probably doing it in a distributive model because that would be like an up thrust where you're basically going up just to sell. And that's not good. And we've had situations like that on AMC where a gap has represented a breakdown. 430 was not the case. I made it very clear when we were coming down that even though I didn't want to fill that gap, and I didn't necessarily think it was 100% needed, and I made that argument because of liquidity purposes, I thought we'd already traded down here quite a bit. I was like, why would we need to trade it all over again? But we did, and then that's what happened. I also said when it came down, I said it doesn't break anything, which is good, right? If this gap had appeared lower, below the support, below 430, that could have been a problem because going down to fill that gap would mean you're dropping support after you've just advanced. So you have to keep in mind that like every situation is different and you have to be able to read the situation. So like right now, what would be a disadvantage of coming down to fill the $5 gap? Well, one of the disadvantages is we just tried to advance above the creek. So at the very least, that would be kind of a negative sentiment on my part, because it's like, well, crap, is that a failed advancement then? Maybe. It would be more definitely a failed advancement if we we came above 582 and then dropped all the way down below 522 and just kind of slid back through like this way. I'd be like, distribution, hardcore. I don't think you're going to stop at the gap. That would be my opinion. If we went all the way back up and did that, I'd be like, yeah, that's a cat ear. You're going to go probably really low, right? That's not what's happened. So for now, it's like, yeah, it could be a localized distribution that's designed to get you to kind of whip high and then whip low, maybe around that structure that we've kind of built here. The tops and bottoms here have formed a bit of a channel. So you could see that as a double flush, where it flushed high above the channel, and then maybe it flushes below the channel, and then it comes back up, and then you try again. That's a little less significant because it could be that situation, and it could be healthy still. The range could still be relatively healthy. I still wouldn't like it. I would still say, I don't want to go above a resistance and then drop back below it, because that just tells me we weren't ready to go. So right now, I was saying early morning, gap could fill here, and it wouldn't break anything. That's why I was saying that. Like, you could come down here and fill this gap, and you'd still be above the main creek body, in my opinion. So I would just want to see it recover, not get stuck beneath here. Could it have set up differently? Sure. But I'm not the one setting up, after hours moves and all this other stuff. So all we can do as retail is just kind of observe what's there. And GME is the same way. It's like, I'm not really happy that if it came high and then broke back below 2687 at this point. Could it be a double flush? Maybe. But I think it's a little different than AMC at this point. Like, a double flush here would have to be just a backup to this creek. I don't know if we would get to the gap. If we went all the way to the gap from here, it could be potentially too far. That's a tougher one to say. We would have to very quickly recover. And yeah, I guess it could be a flush up and then down and then back up. But that'd be a really strange one because of where we are relative. Because AMC, like I said, AMC did not come. It came above 548. So did it potentially distribute on the big picture? If that's the case, maybe. But in the local range, it didn't break any highs. That's not true with GME. It's broken highs. So, and it's not only that, but it's broken above this whole lower region that we were in. So it's a little different. It's not quite the same. So the way I would look at the gaps is kind of different. I would have to see this as like a change of character down low. Like in the example that I drew here, coming low, there'd have to be a pretty significant change of character, and we would see this as like a giant widening. And that's how you'd have to interpret it if you were bullish. Otherwise, you would just look at this and say, yeah, it's bearish and it's going to drop. And that's the nature of like bear and bull traps, right? Like, they don't work in the market unless you have some kind of a guidance that people normally use. So technical analysis is great, but it obviously is used against retail quite a bit, and that's part of the design of it. And as long as you know that that's the game that you're playing, then you're aware of like, here's how some of these things might play out and where I could get kind of deceived, right? Because like the big thing here would be a head fake, like coming up above and then closing below and then continuing downward. That's just a flush. Why would they do that? Well, it causes people to buy in, and then you instigate a bunch of stop losses, and then they short it down. I mean, you can open shorts then low. It's like an inverted spring, right? That could be an example. Could you have a bull trap or a bear trap within the bull trap? Sure. Like, you could initially have this and then sell down to whatever level you want. Sellers get overconfident, and then they could take it back up and use that extra selling pressure to cause a squeeze motion. But that's just like how, you know what I mean? It's not really the why. It's easy to answer the how. Like, that's all the technical stuff that goes on behind the scenes. Like, how could you do this? Well, this and this, this. That doesn't really say, like, what's the ultimate goal. So this push up right here, if it were able to maintain above 28.35, I would say the ultimate goal is to push to the top, is to push to that 31 mark. Like, I think it's to get to that outer creek. I think that's the ultimate goal, you know. And then we could talk about bigger picture wise, like, oh, well, even though this does break low potentially, it also on the big picture could be presenting us with a gigantic wedge action. And it might make sense that this comes low here. You never really can just keep it local. So that's why I'm like, sure, I could see it happening either way. Crossing up high, staying high, and advancing, or hitting high and coming low in this case. Because I think there's a possibility of a larger wedge option here. But yeah, I would say the goal right now would be to hit this outer creek, which we haven't messed with in a while. And it doesn't do anything like crazy. It doesn't break out. Just hits the 31 mark, and it basically gives you another check on resistance. It also checks the resistance from way back here on the 12th that we haven't been to in a while. So the wave here would be like kind of completed. You'd check a lot of things off. It makes sense to me. It may not close that way this week. If we get a big push today up, you see this massive advancement and then come back down, you know, and chill underneath 30 end of the week because people are talking about max pain and stuff. I'm like, yeah, I could see them dipping above it for just a minute and then dropping it and never returning this week, you know. That to me would make sense to kind of like pin it low going into like Friday or something. Sure. It'd be easy enough to do it. But we'll see. We're not there yet. We haven't really confirmed much of anything. We're just kind of chilling out right above the support. I think if we can see that secondary buy-in here, we're just going to take off. We probably won't stop very much. We'll probably stop around 28 and then just advance. Should be a decently fast move. But I think it might be over as soon as it starts, you know. Like we might get a really quick, like 1 hour, 2 hour move and then just be down the rest of the week potentially based on the way this is set up. I could see it pretty easily. The thing about AMC is like its max pain's been stuck at 5 for quite a bit of time. So it definitely makes you feel like it's going to be rough, you know, like it's going to go down. I can't really say that they move together because lately they haven't really been moving together. So it is what it is. I wish I could say they were going to move together, but I'm not positive, you know. And frankly, if this were to distribute right now, again, GME is a little different than AMC. I'm not sure what I would make of it, you know. I don't know what I would make of this gap. I really don't. If it filled, it may be fairly negative if it can't hold it. You can see that slide starting. I don't know, guys. There's so many different possibilities here. What I noted yesterday, which I kind of deleted on the chart, we had very little people on the stream yesterday. Not a lot of you are going to remember this, but we looked at the waves and how there was a really strong sense of continuity of this particular move. It seemed like there was a lot of trajectories that were sort of pointed up towards this corner. And we were looking at it yesterday saying that probably makes the most sense to do a move Monday or Tuesday this week, just based on the timing. Like that's where the advancement seems to suggest you would hit this $30 to $31 area. There are other ways of kind of illustrating the same points, so it's important to note, like, it's not a one size fits all, you know. You can always kind of pick and choose with trajectories, but I was mostly thinking about it in terms of targets and kind of what that looks like in reverse. And it's a hard thing to do. Sometimes I'll like nail this, and then other times it's just wrong. You know, you want it to be right, but it's not right. Usually what we find is that as you get towards the target, it accelerates. So you should get an acceleration of trajectory, and that's where things get kind of tricky, because it's like I should be able to find those accelerations, but it's not always that easy. Like this to me looks right, but at the same time, my timing would be like within the next hour we would be up here, you know. So that's easy enough to debunk and say, well, you're wrong. And there's more than one level here. You got time and you got distance traveled, so price. So usually what I do is I try to pick out the ones that make the most sense to me. Like one would be maybe here. This kind of cuts through a lot of stuff, but then I look at that, I'm like, I think that's kind of a parallel, you know, it may not be a trajectory line. It's tricky. I usually look for those cat ears to help with guidance as well, but they're not always perfectly reliable either, so the reason I do this is because I've noticed that when you look back retrospectively at things, you always can tell that there were trajectories that were pointing towards. And usually what I find is that those are some of the most reliable trajectories for like longer term moves are usually on these waves like these guys. It's kind of like where you make those crosses ends up really mattering. So like this right here, for example, seems to really matter. Like there's a support built here, see that? And then there's a resistance built. And then we actually come back and check it again and then move away from it. And all of that sort of builds around this yellow line that I just drew. And that to me would be a really significant trajectory. So I would look at that and say, yeah, maybe that's where it hits like the top, you know, if it comes up again. And you're looking at that in a triangulation, this one at least you would speculate today before close, you'd probably hit the 30-80 area. But that's a legit way of doing it, and I think it really does work, because it's sort of like a inverted creek. We see the same thing coming down with the waveforms, like the way they interact going across downward trajectories is the same with upward trajectories. So you get kind of both, you know. And like I said, you can almost always go back to like a top or something, and you'll find that naturally, like this would have presented some kind of a trajectory pattern out early on. I mean, this is probably represented as early as back here. As soon as they hit the bottom right here, it builds out like 3 or 4 hits on this trajectory, and then it crosses over it. You could probably do something similar right there. This is the cat ear one that I always talk about. So this one is like the cat ear builds out across it. It's almost always like the middle of the cat ears is what I say. So it's like the first ear's bottom roughly through whatever bottom there is. That waveform builds out as a model of direction. And then you can end up finding that if you're close enough, you can get a pretty good estimation. So if it works retroactively on these cat ears, and anytime we identify cat ear formations that are logically good cat ear formations, you should be able to find that, right? So like one we did was way back here, And you'd be like, well, that didn't work out. No, it didn't. But I think that the nature of this is not completely and totally broken. Like the fact that I did something like this back here and it didn't work out doesn't mean that this doesn't ever work out, because objectively it does quite often, you know. And even on like the macro time frames, you find that these have played out, you know, big scale. So it's a little annoying when you get one and it doesn't work, but it is what it is. Could it be that I was just wrong about the scale of it? Yeah, that's another thing. It's like there's another one right here, right? And this one kind of points to where we're going right now, doesn't it? So this is like the bigger cat ear here. And then there's a cross there, and then it comes up and rejects. So like, could be that maybe we just picked the wrong thing, you know? And now that it's got a much larger setup, this ends up playing out, and it's pretty important. And then you have to sort of pick your levels. I don't know, hard to say on this one. I almost favor this more, this low one. It's real low, but just again, watching the middles. I don't know. And RSI makes it kind of tricky because sometimes it looks really different. I know, I see the price, I see it's holding at 27.87. It's trying to make an advancement. AMC is back to 540, but also just kind of holding that level right now. Not ignoring it, just kind of doing my own thing here. Yeah, so scale-wise, I would say this one already met this lower one. This is the cross here. That's the waveform. You see that support built right there, and then it rejects off of it, and then it shows you a potential place of wave correction, and then you have a bigger wave, and it's easier to see how that would work out, because this is just the bottom of a small wave, and you can see where the bigger wave might go up and hit. And oftentimes RSI hits and it corrects, the price corrects, even if the price doesn't come up very high. So I would say that for now, like this one to me seems to be, it may have been completed here. It may not continue, although I guess if it did, we could look at this. Yeah, and it looks like it's following it kind of. So it's kind of following it back up. So it might end up being a pretty good indication of where we go. I think a better one might be the larger one here, don't you? There's a much larger upward move. That's a massive cat ear. Yeah, this one's harder to do though. I really think, because like the bottom's already in, so I don't know. Maybe there. So you might expect this to come up. It makes sense. This is like a downward angle. Come up a bit higher, and then struggle. Yeah, that's a tough one. I think that to me probably represents the major waveforms here. Like the big ones. Yeah, I would say so. It's basically like this is sort of the end result. Wave up, wave down, wave up. So if you were looking at this and you were looking at the big picture in the same way, this is why I'm not so sure that we're going to make new highs on GME, because big picture, it's the same deal. You've got the push up, you've got a support kind of built out along this. I just showed you this on the micro, so it should make sense. We haven't really tested it yet. We just kind of moved away from it. But you would expect to probably come back up and test it. But you can see how like an advancement right now doesn't necessarily bring you to new highs. So like if I'm doing stuff like this and it sort of makes sense that like, oh yeah, and there's the little M cross right here of like the same thing, you know, That kind of stuff to me is really important because I want to see that this RSI build out that I'm seeing is playing into a larger wave. So yeah, I generally think that that's correct. And there's kind of a middle structure here that we're probably going to go back to. Clustered up my chart here, but so anywho, first move, I think probably just 31. And then we'll have to do some kind of a backup. Could be very steep and then jump up, but I think we're still bound to go up to near 50 again. I just don't know about beyond that, because currently it'd have to jump really high. It'd have to go all the way up above 47. If it can do that, then yeah, I'm down for it. But otherwise, I'm just kind of looking at this like this is pretty much your dominant trajectory line here on the waves. And yeah, kind of just leave it at that. It's somewhere up here. I don't know where exactly. Unfortunately, I thought it was going to be a lot earlier. I thought we'd be up there like up here, you know. We were not, so. And if you look at the big picture, this makes a lot of sense because if you look at the large cross that's going on here, you can see like this is just one gigantic wave, and if it breaks up, you would expect to go back to the next resistance. That's sort of the logical next step, you know? Like, oh yeah, we jumped. So here, let me just quickly doodle it. So if we can hop over this guy, then you would expect to have this imbalance, so to speak. I think you would move very quickly back to the top. This is kind of one of the best places to get a good trade, in my opinion, in our market. Because whenever we see this happen, if it can make that jump, it's such an easy trade because you're like, well, it's just a pennant jump, Booksy. Yeah, but then you actually have kind of like a trajectory and a target too on that jump. And it makes it really easy to trade. And there's other things we can do. Like the one thing I tried to do was measure out to a bottom. That didn't, it's not that it didn't work out. It's just that it wasn't very reliable because so far it hasn't really met the criteria. This would only suggest that, this would suggest if you just looked at the top to the where you think the bottom might be, it would suggest that you should be there by like 2 days. Be at $40 in like 2 days. This is the kind of stuff that, unfortunately, while it does work sometimes, it's often like subjective and you can pick the wrong middle and it's hard. It's hard to do. I usually use the kind of like a methodology of like cross sections, but to try to make sure I've identified the correct center mark. So this makes sense because this is giving me a cross section that's like right there. And that makes sense to me because that's like right in between these two markers that I drew. But again, it's like, it's not perfect, so.
It's time for your morning stretch break.
I don't know, man. There's a lot of potential markers here. They're all like slightly different. And it matters. You might not think it matters, but it matters because if you can find the right thing, you can have a really good calculation of price targets. It's a lot easier to do on the smaller scale. I've done pretty well lately on the small scale. Toot my own horn a little bit, but when we were doing the AMC stuff and I was picking out those targets, that's the method I used for that, and it worked really well. On the short time frame, it was really excellent. But you pick the wrong ones, you're going to be off. So Yeah, it seems like this lower end might be more likely. There's a sort of an intersection right where I've kind of drawn it here, like 44. Yeah, I think that makes sense. Yeah, you get the idea. So let's go back to this local time frame and see what's going on. So yeah, so what I'm trying to do is I use the local waves to sort of, as best I could, maybe triangulate where maybe where we could see potentially a top action. It could be lower. This one's a little tricky because it's so flat, so I'm having a little bit of trouble because of that. It's not that many choices here. Really, they're just parallels, so I suspect it's this pocket right here. I don't know exactly which one, but I think it's one of these, and I think they're basically the same value. One's just offset a little bit. You are next to him. Don't you growl at him. He's just laying there minding his own business. You stuck your face in his face. My cats, dude. Yeah, it might take a while, but like this is kind of the 1 week business in my opinion, or this. Either one of these would be a delay tactic. Like giving people a taste of something doesn't mean you're going to get it all at once. So pushing up to like the $30 mark or $31 mark doesn't mean you're going to run. It just means that you're advancing to potentially do a creek. So that might not be what you're saying. You might be saying like sideways or something here all week. Maybe. Maybe. I don't know why we would trade a lot right here, but I mean, maybe, I don't know. It seemed like a waste of time. I feel like this is a pretty highly traded zone. Yeah, it's like the second highest traded region on this chart right here. So I don't know why you would spend a whole lot of time here and not go ahead and push to the top. And it makes sense to me that you would go back up again to this sell-off zone because we've had a lot of distribution right here. So it really makes more sense to me to go up and check that area out than to just sit still. And if nothing else, maybe go back down to this high liquidity bottom, get the gap fill, and then push back out. Like those are kind of the main options that I see right now. So I've already got them on the chart. I guess I don't really fully understand why you would trade sideways here, but it's all interpretation. So yeah, I don't know. Today looks like a bit of just kind of an early head fake. Really just want to see it build back support again. I don't particularly like the way AMC's looking, to be honest. It's just kind of so-so. It looks like it's trying to, like maybe the bulls are trying to hold this line and so like more steadily get a gap fill perhaps. If we're going to get a gap fill, is like more even keel. We just have to be careful about what happens at the top here. Like a drop is okay, but it needs to recover if that's what occurs. So like I don't want to see it drop below 532. I don't think that would be good for us. Yeah, we're starting to form a bit of a channel. That's fine. It's a nice little even keel kind of channel building out. So maybe we can drop and kind of get to that bottom, and then so auto reaction, support, phase B top, then a quick spring. Little tiny range. You really shouldn't do that with micro ranges, but whatever. It could be the case. This could be like an auto reaction. I mean, I don't know. That's a really silly kind of thing to do, but yeah. And then that's an M cross locally. And then you could get a spring that fills the gap and then jump the creek this away. Oh man, it's really low, isn't it? Eek. Yeah, I don't know. Maybe. So the creek jump on the kind of the more vertical creek jump here that we made, if you want to call it that, would suggest that if you broke down, potentially you go pretty low, like back down to the 520s. Basically, like a big throwback to this bottom here. I don't know. That doesn't really work very well in terms of holding support at 532. I mean, if you drop like straight down, I would probably count it. If it hit low here at 533 maybe, and then reacted strong, that could be just like a really localized dip that gives you that spring, but we'll see. There's probably another one. There is another one here. I actually think we're on it right now. Like this one's a little bit wider. Not much wider. There's another one here. Yeah, this is probably the one I would look at maybe the most. Anyways, let's get rid of that one. These two. Like dip down, get the gap fill, and then retreat. That's the way out. If this is an LPS and we don't fill the gap, then right where it's at right now could be the place that you see that push. But remember, it was only like 2 pennies, so it doesn't really have to go very far to get the gap fill. This kind of works for me. This right here. You think about a creek, it's usually not a straight line, so I would want it to basically like kind of maintain. This is a hard one to draw, isn't it? It's too short. Time frame's too short. Yeah, it's hard because it's almost a straight line, but it's not at the same time. They're kind of curving it out by finding support. I just need to make the curve itself bigger. Trading view, sort of like that. And we'll see. I mean, if it drops below, it drops below. Take it as it goes. GME looking a little bit better right now. The 1 hour is kind of weird, but it did close above. That's a good thing. Closed above 227. Oh yeah, it was really like tight, but that's good. That's a good thing. So it did wick above, but it also wicked below, and then it ended up opening and closing above this 27.72 we marked off. It actually opened at 27.75 and closed at 27.78. So it's currently trading above this support, which is good. For now, that's a positive. We should just take it as a win for the moment. So that's a good thing. Could be building off of that support, and we'll see if it can advance. Well, if I'm right about the trajectories, then yeah, I would get there by like late today, because again, what would be the point? Why even bother coming up here? You know, the only answer I can give, the only answer why I can think you would do an early advancement is to go ahead and test, and you would need to test it one more time before you break it, usually. Although GME has had times where it's just kind of gapped above a creek and you never test it. I guess that happens. But like in a normal circumstance, you would come up here, retest this supply level, and now it's totally normal. I would expect that to be like a normal thing on a chart. To come test the supply level and then also get another checkbox, which is test this really long-standing downtrend. We haven't checked it since June 7th. I mean, it's been over a month. So I think it's time. You've got the upswing, you got the breakout here. Just go ahead and go up, make the test, and then if it doesn't work out, it can still retreat. But it'd be odd to do a head fake here unless you're planning to go low first and get this gap fill and then just advance and never look back. Which some people, I mean, in my opinion, I kind of prefer that. I don't like really checking the resistance first. But whatever. We've already jumped over, so at this point I'm kind of more in favor of just go ahead and advancing. And I think that there's a pretty simple to see trajectory line there. So, and it seems to be important. Actually, I'm going to keep that one on the chart. So that's where I'm at now. I'm just kind of favoring, let's just go ahead and do it today. Hit 30.80 or 31. And then I don't think we're going to close the week above 30, but I think we'll come above it early in the week. Hey, when you get a chance, can you please give the cat some water? Soon. There it is. How low did it go? It went to 535, so basically it got right up to the gap. 534 is where the close value was. There's your high volume candle. Let's see what happens after that. Yeah. Yeah, I mean, and honestly, on this chart, which is a 30-minute chart, it still looks like it's holding, which I think is true. I think it's still holding that second creek, which I got it blue on this one, which is a little lower. So, hey, you got to trade your own plan. I can't tell you what to trade, you know. You got to make those decisions on your own. IWM still pushing. Actually, volume picked back up today, which is interesting. So looks higher than it was yesterday, the first 4 hours. So bigger volume candle. I mean, I got extended trading hours on, so this might be kind of skewed. I think it includes extended hours there, but yeah, I already mentioned that this is historically like extremely overbought. Like this hasn't happened in like a decade on IWM. So I don't have a lot of guidance for you in terms of like RSI and whether or not it should be turning. If you ask my opinion, yeah, I think it's kind of overcooked. Probably would do well to have a pullback. But once you get above 218 here, and at least in extended hours, it hit that 218 and pushed up. You're getting basically a floor. I mean, so the next ceiling is really high. So unless we see some kind of major distributive action, this is a big rally. And yeah, I don't know. I think it could go all the way up to 227 honestly. Wish I had held on more of my stuff, but you know, I had a trading plan. I waited, I got out at 218, didn't feel like holding anymore, and I knew that 220 was a possibility today, but wouldn't have expected it to just keep running. So I'll take it for what it is. I think it's just going, you know, for now. We'll see how it builds out. If I'm really wrong about it, I guess there wouldn't ever be another buy-in. I mean, that's the hard thing to understand is like I can't really see how that could happen. How there could be no sideways action and it just keeps going up, you know, to the top. I feel like that's unreasonable and like wouldn't really make a lot of sense to me, but IWM has not done that. It just hasn't. It's always had like back tests. So again, like I'm all for it. If you guys are in the stock and you're making money, there's no reason to like be super concerned. I guess my only main thought is like, will it ultimately break above 227 and just hold support and go, or is it so overdone? You know, I've been trying to figure out what it could mean being where it is. Like, is it just making like a historic? I mean, it is making a historic move, but there's just no precedent for. I guess back here, without extended hours on, there was a move. I don't even look like anything. Like a really small move in 2017. That's weird. Like became that overbought. I couldn't see anything back to 2013 on 4 hours extended trading hours. On regular trading hours, there's nothing going back to 2009. The only time it's been this overbought was in 2000 and roughly 2000 October of 2017. And I think that's kind of weird because it's not even like a super high move. And then it went into like a month of, well, yeah, about a month of downside going into November. So it was October. That's the last time it was this overbought. I don't know, man. Hard to say. I know that a couple of the people that were really bullish were just talking about it just exploding and like keep going. I just didn't see that happening. I thought we would make a little SOS within an SOS and probably come back to like 210, 211, check that top and then advance. I still think it's possible, but it's like until we see the top and we see the top happen and turn, then there's really no point in trying to call it a top, you know? That's like trying to catch a falling knife. It's like you can see what you want to see in it, but until it actually makes that move, you're just running. So, I mean, it was a huge call out on my part, but I didn't expect it to go this high. So there you go. Like watching this, I knew that there was a like strong chance it was going to explode. And I made money on it. I'm happy about it. I guess what I'm saying is I don't really know what the guidance to give you except for certain levels here. If you're still in the play, just be careful. You know, it's historically, it's just not been this. It's almost never been this overbought. So just be careful. I don't think that something like the 4 hour, it's probably not going to look the same as like the weekly, for example. The weekly's getting there. It's almost there. It might look significantly different. So I'm giving you like one time frame. Daily's overbought for sure, but I haven't looked back historically on that. I was just looking at the 4 hour. I found that to be really curious. So GME is not holding that 2770 level, and we're gonna give it time today, but we may not really know. I wish we could see like some serious action while I'm actually watching the chart. Usually it's like I don't get to see it. All right, I think the gap's filled, so there's no, yeah. I don't know, man. That wick goes low. It must have went right up to like a decimal away. I think it's pretty much filled, so if that's the final move, I'd be happy with it. So I think we could possibly see it work its way out now. We'll see what happens. If this forms a bit of a bottom here, what I'd like to see is it holds support above 536. If we can hold support above 536, we may be done with a recovery here. I think we might see, I don't know, it's a high volume sell-off, but that's a selling climax too. It didn't really drop that far. It just went to the gap. So we might just see, I don't really care, I guess, what happens now, as long as it holds above. Yeah, people keep talking about mid fours. Do you think there's a 50-50 chance? No. I can't do TA for other people, so like I can't interpret what other people are saying because they may be looking at things through a really different lens than I'm looking at things. I don't think we could healthfully get back down to mid fours. I believe what people are looking at is this head and shoulder, but I don't know how they reconcile then why support has built higher. And that doesn't really make sense to me. So if I'm looking at this from a perspective of like, hey, there's a head and shoulder here, I think what the argument is that that's because there's a shoulder marker down here like 465, 460, 450. I think that's what people are looking at, and maybe they're anticipating this level right here, like 470 down to 450, being like a needed support. I'm sure if you use a fib retracement, there's probably some kind of important fib retracement at like 4 or something, but I think I made a case for this before that 485 is the liquid center. And I don't see the need to go back below 485. So like, I know that folks are talking about it, but the idea of like, when you say mid fours, I think what people are talking about is this like 450 level, like this huge retracement. While I understand that that's normal for AMC to make deep retracements, this would be like an 854 retracement to 450. While I understand there's a shoulder there, this shoulder has set up higher. Like the neckline is up here. And I don't know exactly how people interpret things, if they're always looking at horizontals with head and shoulders. I don't. Okay, I look at them and I think of them as angled just as well as straight. So when I look at this, I see an angled head and shoulder. So therefore, like I would take the angle and I would mimic it downward. And like I would say that at lowest, this comes back to like that 490 area, like this bottom. You know? And that's about as far as I push it. And I would say if it has an extension, maybe it goes to 485. Why does 485 matter? Because like literally every single time a stock has moved out of these ranges, it moves from like the center at some point. And that's what happened back here is like it's the center mark of that range here from the drop-in value. I made a lot of noise about this early on that I feel that that's the most likely case. If we were going to come back down right now, do I think we go all the way back down to like 430 or 450? No. I think what's most likely is that we use that drop-off level, which has been I've consistently have said since the very beginning has been 485. We've talked about 485 like nonstop since May. I think that's the liquid center. I don't think it's 450. So I may be wrong. We all know that that's possible. I may be interpreting it wrong, and there might be a need to come down lower. But I don't think I am. And I also think that when you look at this bigger picture and you look at the trend coming up, if we were to drop down, would you see this going below this current low trend right here comfortably? Because my answer is no. Like, I wouldn't see that. The lowest trend possible right here. Like, if anything, you might say, sure, it comes back down, it hits it and goes. That's what happened last time. Well, it hits it at 485, like, as we drop down here. Unless we just gap down tomorrow, then it would be like 465. So do I think it's a 50-50 chance that we go down that low? No. Do I think there's a chance we go down low? Yeah. Sure. But I also kind of talked about this in a few different ways. And when we went back and we looked at it and we built out a chart based on like kind of everything we were seeing, I kind of think there's a strong chance that we don't go below 5 again. I still think this is a very strong probability. Like, if the stock is good and healthy, we may not need to go down and hit that liquid center. But if we do, that's as low as I think we're going to go. I don't think we're going to go below that. I don't see why we would. Again, I can't do TA for other people. There's other people, they may make a really good argument for it. Consider their argument. Consider it as valid as you need to consider it. Because I can't speak on behalf of other people's TA. So if they're seeing something and they're like, no, here's why it has to do this, just take it for what it is. Like, consider it. Because that's all I can do. I can't, I can't make a case that it goes there. So I just won't do that. And I've repeatedly heard 450 for a while from different people. I think it has to do with this bottom here, and I don't know. That's really at like 470, but it's not really that low because really the support is actually built out at like 470, not 450. But I feel like that's probably where people are looking, and they're thinking that it's going to come back down and hit that because of some kind of a head and shoulder motion here. But a shoulder doesn't have to be like exactly the same height. And when I look at it upside down, I mean, we've had so many instances like this on AMC where the right shoulder is like weaker or something. It doesn't come as far. So I don't see this as like a 50-50 chance right now. I see it as maybe we come back and get that gap fill, and that's probably as far as we would need to go. Like, I see that as the level. I'm just showing you my chart because I'm like, that's why I'm like visualizing it. I don't know. It's hard for me to make a case that somehow it goes all the way back to 450, which is near the bottom. I mean, and anything can happen in the market, and I know that there's other reasons why people might have that level as a support. I mean, it was support back here. I mean, you're basically just talking about a throwback. So, no, I don't think it's 50-50. And by the way, if something's 50-50, I don't trade it. That you might as well be guessing at that point. Like, you might as well not be doing TA at all if you come up with a 50-50. Those are the moments when I just kind of say I don't know, and frankly, I'm not going to touch it those are bad odds. You're at the mercy of, institutional powers and random chance, and I don't like that. So if you think it's a 50-50 chance, then do whatever you want to do, but I personally wouldn't touch a trade if I was like 50-50 on it. That doesn't make any sense to me. Like, that's just gambling, flip a coin. I mean, that's sort of how I feel about it. And so many people, that's how they trade the market. And I'm like, that's not how I want to trade it. I want to have at least like a 70-30 You know, if I have a 60-40, that's usually 60-40 or something like that. That's just my vibe, like how I'm feeling about it. That might be a time where I get like a double position to like hedge myself, you know, when I have like 60-40. That's like the hedging level. But 50-50 is like I'm not touching that, you know. I don't like that. The odds are in no one's favor, right? You can't predict a bull or a bear run. At least if it were like 40-60 and you were like, hey, I think it's more likely that it goes down. Now you've got like a sway. You can trade the direction. I'm not trying to like pick on you about the 50-50 comment. I'm just saying, this is a matter of fact, like I probably wouldn't trade that if I thought it was 50-50. I would just be like, nope, no thanks. I won't touch it. So, yeah. So I don't know, man. I don't know who people follow. The other thing about this, I talked about this quite a bit, is this rising right here. I don't want to have to recap everything every single day because I think that gets tiresome for folks. But this is a little more theoretical than some of the other stuff I talk about. But this has to do with a wind up and an unwinding. And what I found is that when you look at, we call them fractals, which is the pattern of trading right across time. This is a really common one that you see, which is this kind of wind up and then wind back down. And it usually builds out on like a slope. And so often what it looks like, I'll draw it below. Often what it looks like is kind of a widening, which is sort of what we're getting on the top here, but it's like a head and shoulder. And then interestingly, you get kind of an unwinding that forms like a cat ear on the top. But then what actually happens is that it turns into this kind of like cat ear, like head and shoulder kind of thing. And you end up with a funny, like again, funnily enough, you kind of end up with this cat ear, but then it also appears as almost like a head and shoulder formation up and down. And sometimes it can be really distinct like this, and other times it's like really dramatic. But I find that to be a really common pattern. And then if it's going to hold, a lot of times this ends up being a spring level. And I'm specifically doing this example right here to show you, like, because there's two lines usually it follows. And I want to show you something really interesting about it. So this is where things get kind of cool, I guess. When you see this kind of wind up and then this unwinding, if it's built higher, then it can be very, very bullish, because as long as this didn't distribute at the end, again, it can't have like an up thrust right here at the very last bit, which looks like a cat ear, then usually what you find is this actually returns to a previous like support level that's clearly like been built out. So you got this wind up and then this unwinding that looks like a rising head and shoulder. And this turns back to like a previous support level at the end if it breaks down. And it goes down to like this usually like a liquid center or something. And then usually all the same, if this came off another side, hang on. And I'm not going to do it like a really great justice here, but I'm going to try my best. Usually if this came off of another M cross and there's another wave, this waveform ends up being basically like where you land in the end. It would probably be something like this. Kind of messed it up. Like that. So it ends up being like this really clear, like return to support, return to major creek cross. So this pattern right here only ever appears, at least as far as I've seen it, on what I call like the right side of a wave. Left side, right side. So there's a left M, right M kind of thing. And it's essentially used as like a wind-up tool. You can see it when it breaks out here. Like here's another one. This is a good example of one. Actually, this is a great example of one. It just happened. So here's that head and shoulder right there. You see it? And see like the wind up and then the unwinding. So it winds up to the creek and then it unwinds and then it drops below and it returns back to previous level. And then to put like some more context into it, there's kind of the cross trend there that you can see. There it lays back down. So the wave completes by kind of unwinding. I call it unwinding because I don't know what else to describe it as. It's like a mimicking of the left side buildup. And it's just kind of a pattern out that looks like a head and shoulder. Really simple, but that's frequently what happens. You see the same thing here in some regard, almost like a micro version of the same exact thing. You know, like this guy right here looks like an iteration. When you look at it closer up, you're like, oh, it's like iterating like the same concept, but it's doing the same thing but like smaller. That's because I think it is. It's like this one pattern of trading that's just doing the same thing over and over and over until it exhausts itself. I would even go so far as to say it's doing it here too. Like there it is again. So you're consistently getting these kind of like wind-ups and unwindings like over and over and over as you're combing through liquidity until finally you get to the end, and there's probably one there, but I'm not going to look for it, and that's like the pattern break. So what I think we would be talking about in the current time frame is something very similar to what happened over here on the left, but more micro. And then you can use different interpretation to like determine where you think that might be winding up to and where we go back to. But usually it's going back to some kind of liquid center, you know. So this one came back really low. I mean, that's probably the argument you could make about coming back to 450. But that's also because this was set up really low compared to this range. I think ours is set up higher. I think it's up here at like 490. So, and then I really just have to kind of observe and just say, well, where is that trend? Like, where's that trend at? And again, not perfect. I could be wrong, but I think it's setting up really steep. So I believe that it's like right there. And I don't think we would go below this mark, which is why, again, I've been talking about 5, and I'm like, it kind of looks like 5 is the answer, not actually going all the way back down, because this actually gives you back to that same mark. So again, maybe I'm wrong, but that's sort of where I see the parallels dropping if they drop, and coming back down to this level, perhaps with an extension down to like, I mean, that would be a deep drop, but perhaps with an extension down. Left side started July 10th. No. But you'll find that I'm not a fan of cup and handles, so I'll put it this way. If you ask me if I see a cup and handle, and it's not more than like 8 to 16 weeks long, I'm probably going to say no. Do I think it could be like a cup and handle type pattern? Maybe. But I'll tell you, in the last 3 years, I don't think I've seen almost any cup and handles really finish correctly. Unless they're just ones that people have said like, well, that was this is a cup and handle or something. I mean, and I don't interpret it that way. So it's like one person would look at something like this and say, this is a cup and a handle, and then it goes. I just look at it as a waveform that jumped over a creek here, you know. So that's not the way I interpret this kind of stuff. If this is a waveform that jumped over a creek, that's the way I would interpret it. I wouldn't interpret it as a cup and handle. I find it to be highly unreliable when it's a short time frame. It doesn't usually give the right target, and it doesn't usually give me much of anything, to be honest. It's unfortunate too, because when I started trading a long time ago now, it would be like 16 years ago now, when I first started trying to trade in the market. I actually was really pretty affluent with patterns, and I would use certain patterns to break as breakout molds, and I liked the cup and handle because when I could find it and it was a high time frame, it was really reliable. But on AMC, the only place that I see a cup and handle, and it sometimes appears, is at the very end of like a breakout, where this is where you might make the argument that there's a cup and handle, like right here. Because if you think this is the end of a breakout, this is kind of the only place I see one that it sometimes appears as like a cup and handle, and it's like you get to the end here, and like let's say for example this goes up really high. This does happen sometimes. We've seen it. I've seen it. And then it comes back down pretty low. Like the creek is actually real steep. Sometimes this can kind of present itself as like a kind of a cup and a handle. There's an example from like August, I think, or July, something like that. August or July of 2021, where there's like a little cup and handle finish. And it looks almost just like this. But usually I'd rather not call it a cup and handle unless it hits like the top, like, and it's been a really long trading pattern. Because like someone else would probably look at this and say it looks like a cup and handle too, but it's more of like a V shape than a bowl. And the other thing about cup and handles is they're supposed to have a ramp of volume. Like the volume itself should look like a bowl. And that rarely ever happens in the market. It's really not that common. So I think it's a real pattern. I think it's we see it too much. It's like a head and shoulder. We see them like all over the place. I think they're real patterns that show a kind of trading might be happening. But a proper head and shoulder should be like at least, I mean, usually at least a month or 2 months long. And honestly, a 16-week pattern is usually even better. So at least 3 months is typically where I'm at. 3 or 4 months. It kind of goes without saying, but like micro patterns are just kind of micro patterns, and they're not always very reliable. So you know, you can see whatever you want to see in a pattern, and it might break the right way, and you could be like kind of, this is what I feel like I've fallen into this quite a bit, where I'll think I see these patterns, and then I'll think that they're breaking the right way, and that makes it a reliable pattern in my mind. And so then I start trying to use it everywhere. And that started happening on AMC early on with wedges, because I kept seeing the wedge pattern. And what I didn't realize is that wedge pattern that I kept seeing, eventually I started calling it by what I wanted to call it by, which was they call it the cat ears, because the cat ears looks like a wedge. The problem is that when the cat ears are distributive, they basically do like a head fake out of the wedge, and then it breaks down. And I don't want to make it sound like some kind of weird hierarchy of like elite traders or something, but like I genuinely think that that's part of the reason why it looks like a wedge, is because they're people who are new to trading. That's like one of the first patterns you learn is consolidation, which is a real thing, and it does break out sometimes, but it's one of the more easy to identify trading patterns. And so people see that and they already think it's going to go, but it's actually also like if you look at the Wyckoff distribution schematic, it looks like a wedge. So it can be perceived as a wedge pretty easily. So it's a funny little thing. And the same with accumulation. So I find it to be a very unreliable pattern for stocks like AMC, which have a high concentration of volatility compared to some stocks which are more regular. But like I traded a flag pattern like on GME, because GME was a giant flag coming down, and it had a target of $85. It hit $80. So I mean, it was a really classic flag, and it actually worked out. But like most of the time, if I see this in the market, I'm not going to call it a flag, even though you might look at it and say it's a flag. I'm like, you know, like that's just one of those things that you just sort of pick up on, and it's not. I'm trying to give you what I think is a solid piece of information about something like AMC. Just be careful with what might look like a really simple pattern may not actually be what you think it is. This one, especially on AMC, just I feel like it tears people up because it happens all over the place on this stock. It's really frustrating. It's just not a very reliable one. So I think flags, cup and handles, head and shoulders are all a little too unreliable on AMC and GME. They tend to be the most abused, especially the head and shoulder one. Do y'all remember on GME like how many people were calling for like 17 and 18? And it was probably because of the apparent head and shoulder that folks were seeing. And I was trying to make a case that like, yes, this looks like a rising head and shoulder, but it's not. You know? Time has proven that correct. But like at the time when we were here, I couldn't tell you how many times people were telling me every single day, like, what do you think about 18? What do you think about 17? What do you think about 18? What do you think about 17? And I'm like, I guess people are reading this as a head and shoulder, but that's the way that Wyckoff sets up. Like it sets up, you can call it Wyckoff, but it calls it just a range. Like, you know what I mean? Like it sets up with an auto reaction and then a support and then a phase B top. And then usually there's like another top here. And just because there's like another top, people will say like it's a head and shoulder. Usually what they're seeing is this trend breakdown here. And sometimes that head and shoulder goes low, you know, as it were. Sometimes it does, and sometimes that breakout target works out really well. And then other times it's really like, it's just you're in a phase B and you're just going to coast and, you know, and do weird stuff. And then eventually maybe you have a spring and you leave. Like, I don't know, like they're all kind of the same. And sometimes this shoulder sets up higher, like it's like a double topping action. People will still see like a head and shoulder in it. And I'm like, I don't know, maybe. You know, there's so many things that can change out of that initial setup for a range. So that's another one that I don't really like. Yeah, because folks would use it and they would say like right here that the neckline would demand that there's a breakdown, that if it leaves this neckline, which it did, that there would be a breakdown really low to like 18, but it never got there. I mean, it was a horrible way to trade this. If you traded it from where you perceive that neckline to be, it just wouldn't have worked. Like the target wouldn't have worked. So I didn't feel like that was the best answer at the time for that reason. And the same thing with this guy. This looks like a head and shoulder, but it's rising and it never really breaks the neck. So same deal. It's like if that head and shoulder had completed, and the top one may have this really high one, but this one didn't. I mean, the market would have called it that. Pundits or whoever, the analysts would have said, there's a head and shoulder present. Your algorithms or whatever that tell you these patterns on these programs, they often see stuff like that. And sometimes it's weird. They'll see like a head and shoulder like here, you know? And it's like, yeah, they might be there, but I don't really see why that would break down. You know what I mean? It's bizarre. It calls out weird stuff. You use those auto pattern things. I'd much rather just use the wave analysis at this point. And then I'll use Bukowski if there's a really evident pattern that I like for a bottom or something. I'll try it. And Bukowski's patterns, if you correctly identify them and they have the right volume profile, they're built on like super high statistical trades. So they're built on like 600 to 1,000 perfect trades. So those are really good statistical ones because they can give you, and that's free. You can go to Bulkowski, his website. He's got hundreds of patterns. Thomas Bulkowski. But he also has all kinds of data about them. He doesn't just say, hey, just trade this shape. It's like, here's what the volume needs to look like. Here's what happens if there's a throwback. Here's what happens if this or that. It requires a lot, you know. It requires you to really pay attention. That was a bit of a rant. You know, if this were a cup and handle, we could do a measurement for it. And cup and handle has a bowl breakout. And this is always challenging to me when it's on like an angle because I'm like, I don't really know, you know, how high is the bowl? Maybe it is from the 10th, you know, and it does go back up to that top. May not be much of an angle. And then you could measure that from where the flag breaks. Could this give you a reliable target? Maybe. So just to give you like an example of like how one person might interpret it as a cup and handle, I wouldn't necessarily interpret it that way, but if you use it correctly and this ends up only coming back down to 531 or something, sure. Like this could give you a breakout that goes back up to 570. Well, that's kind of what I've got drawn here. And I'm using a really different method to sort of see the same things. So one interpretation of that as a cup and handle pretty much gives you the same result. And I think it's supposed to be measured from the bottom of the handle, not from the neckline. That's more of like a head and shoulder measure. I'd have to double check, but if I recall, I think you measure it from the breakout on the handle. So if the handle was really high, it could give you a much, and flat, it would give you a much higher break. I just kind of see that as like waveform though, like kind of makes sense to me that that move down could equal that move back up. Like this move right here, which is essentially the neck or the distance of the bowl, could then equal like the move back out. I don't know. To me, that makes sense from the perspective of waves because you're talking about up, down, up. So I know it sounds like kind of silly, but that's just the way I would see it. Like, sure, like that makes sense. And I think that's kind of the beauty of mathematics in the market is like you might happen upon the same target using a completely different method. And it's all good. So thank you for bringing that to my attention, Broiler, because I think that is a good talking point with TA. Well, I gotta be honest, I'm not really feeling it right now. So I'm trying to figure out if this looks more like a top to me or just like a consolidation. On GME, I'm not really sure. So earlier it went low and it bounced and it actually closed on the hourly above 27.72, but it's since found a rejection at 28.10. There's a double top here around 28.10. I'm not really sure what to make of that just yet, other than it looks like it got rejected low. So what I think is kind of like what I'm seeing with AMC is we may have just needed to jump the creek and find support. So it hopped over kind of the local downtrend here. And honestly, this could go pretty low if you look at it that way. But it jumped over it, and now it's trying to find some support and see if it can find a higher low. So if you were looking at this like as if it were like a regular range, what you would say is this is auto reaction, this is support, this would be your phase B potentially, even though it didn't come higher in this case, kind of double topped. And then you'd basically be looking for some kind of support and or spring. So right now I'd say the support looks lower. It's at like 27.43 area. So there's a lot of little things here to kind of mark off if you wanted to mark them off, but none of these really look like they're that important in the end. They're all kind of built around these larger ranges. So at the end of the day, what I would say is that this setup looks so-so, and I would probably just wait and see if it can make an advancement within the next hour or so. See if we can make an advancement back up above. Honestly, it looks like it's probably going to try to drop one more time. It may go for that gap if it does that, though, because then if it drops here, it's going to lose that trend. It's tough. Yeah, I don't know, man. Kind of looks like it would just drop, and then, I don't know. It looks like it's too low. It's like another range. Well, anything can happen. You know, if it were me, I wouldn't make it go all the way down below 27.37. But I'm not the operator, so I don't know. I would tease the gap, probably double bottom here, and then go ahead and react back up. Because this would give you this creek cross here. And then you could essentially build out another support high. Of course, this could also turn distributive later on. But if I were going to advance today, that's probably what I would do. So it would need to go ahead and make a move back through this top, I think. So this would be the basic path forward if it's going to just make a quick move and just move back out. And yeah, frankly, anything else other than this would be sideways up top or real low, and then probably have to reaccumulate down here. So that's my thought. If it goes down, you'd have to build out a new section, and this could end up being very long-winded based on this build out. So yeah. Mm-hmm. Bill Pult, who's a big investor in GME, said he has a big announcement about a stock and don't want to miss it. About a stock or about GME? Just any old stock? Some random stock he likes? That's a weird thing to announce. I haven't announced I'm going to have an announcement. You better be careful, man. They're trying to claim everybody is manipulating everything now. All right. I was just saying goodbye to the wifey. She's going to work.
If I can't call you hubby, you can't call me hubby.
You can call me whatever you want to call me when I'm not in the room. Call me a dirtbag. I don't care. As long as I don't hear it. I'm just saying. IG News. Oh, that's what he said. Pult Capital. I don't know anything about that guy, so really can't tell you. I don't have a strong opinion about it. Someone asked me way earlier about MPW. There really isn't much to say about it except what was said yesterday near close. When we pushed up, I thought that we might come back down to this level because we didn't check it. It didn't come very low, so I wouldn't be surprised if it still kept going down, because it just doesn't really seem like we did much of a check. But I mentioned we jumped over the 4 hour or the 1 hour moving average here, and we also jumped over the creek. This is a big deal for MPW. It's definitely in a place where it could gain quite a bit of momentum very, very shortly and very, very quickly. So this is a very, very, I keep saying very, very, but I'm just saying it's a really big deal. So this is a huge creek jump. All we've managed to do so far is just advance, check a creek, retreat, jump the creek, check the creek, advance, check a creek, jump the creek. You know, it's just kind of like really great in terms of how it's been moving. I don't see a lot of negative here. I really don't. There's folks that are really bearish on this for whatever reason. That's probably why it has such high short interest. So I don't expect there to be positive news about it or positive sentiment about it on whatever social media that you guys are on. And I'm not on any, so I don't really hear it. I'm just forming my own opinions based on what I think. So if you hear negative things about it, that's fine. You know, I'm not particularly concerned, I guess. Like, people that are bearish on it for whatever their reason. And the thing is like, I knew it had like 30% short interest, which means there's obviously a ton of people who think this stock is not going anywhere. That's a huge amount of short interest. That's really high. It also has like 75% investor interest, or institutional buy-in, which tells me that institutions clearly betting on it big, and that's a big deal. So with such high short interest and such high institutional investment, it's just kind of primed for a squeeze. And I think that it'll be it's going to be a lot of retail traders and probably some smaller hedge funds that are getting squeezed out. So it does not surprise me if people are kind of like bearish on it. I've treated it mostly as a technical trade. I think there's possibility and probability at every turn for things to not go the way you want them to go. You know, obviously it didn't go the way I wanted it to go back here, and we didn't end up keeping that support built. We failed right at the last moment to kind of hold that support at 485. Oddly, it's like the same number as AMC. That 485 number is weird. I didn't pick this for that reason. It just so happens that that's the number. I don't know why. It's a conspiracy. 485. Maybe the same operator. You know, I don't know why they would like that number, but it is what it is. It needs to get back above that 485 level before we really could say it's advancing. But for now, I'm not seeing anything negative here. It just looks like it's back testing the trend that it lost when it dropped off. So when it dropped off in June on the 27th, you can see it back tested this trend. It lost this level around 460 and it back tested this bigger uptrend, this parallel. And all we've done is gone down and checked the lower parallel, and then we've recovered. And what it seems to me is that once you recover from this, you would just head to the next one. So if and when it recovers and holds this level, and it's trying to right now, I genuinely think the next advancement is probably going to take you right up to above 570, because I don't know where else it would need to go at this point. It's kind of like this is the build out. Remember that wind up and unwinding? We just talked about this.
and how like after it comes back down, it usually goes to a pretty logical place. This came to the golden pocket. It came to a previous support level. I mean, you can just see it in the chart. It's essentially like bottoming here on a major level. So I know it sounds maybe weird to say it, but because I'm not, there's just so much things going on right now, but there's like, this is one of those things where it's like, it's so evident to me that it's painful, and I'm wondering like if it's too obvious because I'm like, I don't get it. Like there's an M cross right here. Everything about it looks super simple to me. And then it came back down and it hit like a support, like historically, this is like the bottom. It was the golden pocket retrace. I try not to hype stuff too much, but this is just a really clean example of like a really simple wave cross here. And I don't know what to say except that it looks almost like too perfect. Like it would go from this $4 level all the way up to almost $6, because that's where the intersection is. There's a downward movement here as well. You can see it's gone across that gap multiple times. Yeah, and then it's basically at the top when it gets to $6. This could be a problem area, so I always like to mark that off. This could be an issue right here when it gets there. It may get there around earnings, so that could be a thing. But just looking at it, I'm like, it's basically made a full recovery now at this point from where it was 2 weeks ago, 2.5 weeks ago. So, and it looks like it's trying to back test. That's what that little move backward was. So if that can hold at 468, maybe we don't go any lower. And at that point, I just expect it to advance freaking fast, The last known trajectories were ridiculously steep on this thing. It was way over here. So if you're looking at a kind of a similar example and you're like, well, what is that? We were talking about this earlier, like that waveform setup. It's there. I mean, it's right there. So I genuinely think it could be up to near $6 by the earnings report coming up, which is pretty soon. It looks like estimated on Thursday, the 25th. It looks like it's running up into it to me. It could be something where it's very delayed and we get this massive move after. That's always a possibility, but I'm just looking at the chart, guys, and that's what I'm seeing. So I think there's a strong chance we get a big advancement here in the next week or so. Hopefully it's very lucrative for those that have purchased anything in it. It's kind of dead. It's kind of a dead trade right now. I'm just going to be straightforward with you. MPW doesn't really move very much call-wise until suddenly it does. So like yesterday, it had been flat for so long. And today it's up like 80%. Why? Probably because somebody like absorbed some of the thing. It was probably me, like individually, you know what I mean? And then it's down all of a sudden. Now it's down like, it just goes crazy. Like, I don't know. It was up like 60% this morning. Now it's down like 10%. Why? Because when the bid and the ask are spread apart far, people buy those orders and then it just jumps like crazy fast. So yesterday, it was at like 5 cents a contract. Now it's at 6 cents, but it had gone up to like 7 or 8 cents for a second, and then it came back down. That's normal for this kind of a trade, because until there's a lot of belief in the trade and you get the volume, people are still like short on it. They're not going to be looking for calls and stuff. So it's a little, let's just call it's contrarian play, right? So like the value of a $10 call, which is a leap, is probably not going to pick up some serious steam until all of a sudden this thing breaks above a huge macro downtrend, and then all of a sudden you're racing up towards like $7 or $8, and it's like, well, crap, I want that call now. Now suddenly they're super valuable, but early on they're not going to be. They're basically just been flat, is what I'm trying to say. And so the bid and the ask on them has been very, very wonky, kind of as a result. So just so you know, if you're going to trade it, it's trading pretty low, and I don't think it's going to trade very high until it starts really moving. And last time I bought into this was over here. It was like 10 cents at the time. So, I mean, obviously it's lost value since then, but like it went up to like 30 cents on this move basically overnight. And then it went back down and it just kind of stayed the same. So, like, again, until you start seeing real volume in it, I don't think you're going to get necessarily, you know, what you want to get. Does that make sense? Like, you may not see some explosive move on it. So what I've been doing is buying ridiculously low options because I believe it's a long-term play, and I'm looking at 6 months out. Like, I still believe in this target that I got. Weird as it might sound, I still believe in this target that I got for October, which is this very strange cyclical target that I found. It's probably the weirdest, most conspiracy theory thing I've done ever in the market. But let me tell you guys, if it hits on this date, I'm not gonna poop my pants, but I would be very, 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 like, crazy. I would be like mad. I would go mad. Because I don't even know how I would process that, to be honest. If I somehow found like an actual 4-year or whatever cycle or whatever it was like, say, like 2 years or something like that, I would have broken the market. You know what I mean? Like, cracked it. And that doesn't make sense to you guys if you weren't here for it. But it's kind of like it's not tinfoil hat. It's based on a pattern that I identified, but I couldn't identify that pattern elsewhere. I tried my best, and I just genuinely couldn't really find another stock where it worked perfectly. So it might just be a medical properties exclusive. Or I'm just crazy and it's nowhere near there. It's just way off, and I'm like, well, there you go. You know, I'm just crazy. It didn't work. But this is something I found way back, so I think it was like April or something. And I'm not gonna boast about it, but I need to like tell you guys this is like a bonkers prediction. I've never tried to be that precise where I'm like calling it to the penny. So what I think is it's gonna open or close on one of these values on that date. That's what my prediction is. That's an insanely ridiculous prediction, but somewhere between this, it's a very small 23-cent window. And I'm saying I think it's going to open or close in that window on that date. It'd be really fun if it did. Was that the run for AMC? Is 380 still possible on GME? You think it can still go up? All right. Well, let me answer the short-term question first, and then we'll look at the long-term. Was that the run for AMC? Maybe. This one is a little more on the nose because we're waiting to see if it can build support. But I don't think it's default over. So it needs to jump this creek, and it hasn't yet done that. So instead, it's been pushing lower. So that tells me that this move, you see this move right here that I have drawn out? So that this is like the bottom. This is the support, which means this would be your potential spring. So if it can jump the creek now and advance across the creek, it should advance and go back up to test at least 540. In general, you usually see it advance back to near the auto reaction. And that's because the auto reaction is specifically going back to like a top level. So if we got stuck here, this is where things could get kind of bad. But if we can advance, this should be a good little shallow S curve with an M cross and then a second M cross. So my expectation would be that as long as it's above 532 and it can still jump the creek here and have an advancement, I think it's fine. It's widening out, which is good. My bigger concern is like rejecting. We kind of just did it. We rejected on 536. I was like, we need to find support over 536. And we just kind of rejected on it. So we'll see. It might be that rejection sends us back down. You can see that push out and then the rejection back down. Again, I'm not super concerned as long as we find support above 532 here somewhere and then jump this creek. We might see an advancement again. That would just be like us turning around. So it's sort of like a bottoming action. You can see why. It's breaking that downtrend. I mentioned first thing this morning, I didn't really feel like this was unheard of. So I drew this on the chart yesterday, that we could pop up high and then come all the way back down. So almost exactly what I drew, except it didn't spend a lot of time up top, did it? It spent very little time up top. But almost exactly what I drew yesterday in terms of like the distance traveled. So if I said it yesterday, I wouldn't just like not say that it's not possible today. I trust my past self to some degree. I mean, I make mistakes. So sometimes I'll look back and I'll be like, I don't know what I was thinking, why I thought that was okay. But I think I understood what I was saying. My bigger concern is it's below this outer creek, this yellow one. So again, if it holds this low guy, this blue one, I think that's really where the creek is. The support could be right there. So if it can hold that and advance again, we should be good. It's the same concept as we saw here that I was drawing yesterday. It's just a matter of timing being a little different. What I don't really want is to see it lose this trend and then fail, again, under 532. That's like a no-go zone. So I'm actually going to put an alert at 5. Oh, crap. As soon as I said that, it dumped beneath 532. What in the world? I was like, I really don't want to see it go below 532. And then it drops below 532. You got to be kidding me. Flexibility would say that, sure, like it could go pretty low here. But this is where things start getting bad. Like if you come below 532 and it looks like it's doing it, and you basically have a hook here, this is where things can start getting really negative for AMC. This is where you could be in like a free fall mode, probably to head down towards the gap, because what that would be to me is like basically like a massive up thrust. And I guess one person might argue that maybe it's more like 525 or something, but I would say it's bad if it goes below 532 and holds beneath it. So that's horrible, man. I wish I hadn't said it. Like it was like right at the moment I said it. The good news is on the 3 minute, it looks like it's not 6 minute. On the 3 minute, it looks like it's oversold already. So that's good. So just stop talking. I know, right? And that's as soon as I said, hey, we don't want it to go beneath 531. I was trying to put an alert on my chart. So I've been seeing downside. Right now, this looks like distributive because it's high volume in this pump up. There's a lot of volume in this pump up and then come back down. And that's part of the nature of this is like you're watching to see if it advances early above a creek and then fails. So what that would then look like is that you're kind of seeing a combination of these two, where I said maybe an up thrust. This could be like a second up thrust that went high. This is the first one yesterday, and this would be the second one today. It's sort of in the middle, so I'm not going to say with certainty just yet. I think it could still find support. It's possible. But if it doesn't, then yeah, I think we're gonna head down towards that 5. And I don't find that to be particularly bad though. Like some folks are really worried about coming down there, but I don't feel that bad about it. I think it's fine if it does do that, because I genuinely believe that that could be a serious bottom for us. So I think the challenge is in understanding like that after that it could be a week, and that's where I think the frustration starts coming back in of like, why do we keep finding targets that are so soon and we just keep passing them by? That's the only thing I might get frustrated about is the timing aspect. But in terms of like price action, if we came down to 5 and chopped along 5 into the end of the week, that could be fine, because you could jump the creek lower and then maintain it into Monday and you could advance again. So in theory, it's not the end of the world. Unfortunately, though, that would mean that this could be like a big head fake and just screwed over a lot of people, you know, that big buy-in. But that's the nature of gap ups. You know, they don't often end very well. They don't always end very well. And same goes for GME. It's struggling right now under 27.72. It's holding up better than AMC. It still looks like it could be trying to advance, but at this point, now I'm looking at it, it just looks like a double ear, so it's hard to see it, but I'm kind of seeing it now, like the first push. If the second push fails where it's at, it's not going to advance. It's this guy right here. So if it gets stuck beneath it, then usually that indicates to me that this is like an S curve. So if you see what I call like a falling cat ear, where you've got like a paw, which is your extension, and then you've got a second ear, which creates a resistance, that could be a Wyckofian setup for sure. And then you could end up building out back up, but it's still a cat ear. So you get to this part, and this is where it needs to either break or not break, right? So you get the M cross, which is what I'm showing you there, right? Going across, or if it doesn't break and it fails to advance, this usually indicates that this is like a weakness, and then you really are looking at like a second flat ear. It's essentially just what I call like an S curve at that point. I stopped calling it a cat ear, which is usually what I call it. Instead, I would just call it like an S curve, and then I would measure from that midline, which seems to be there, and I would say there's the S curve, takes you back down to the gap. They're one and the same. They may seem like completely separate entities, but they're really the same in terms of patterning. If you look at a cat ear and an S curve, and you observe the two next to each other, in terms of like algorithmic movement, if you want to call it that, fractal movement, you'll basically find they're one-to-one. It's just that the severity of downside on an S curve, or a movement up, if it's a bullish S curve, is the volume shifts make it apparent. So as you jump down, you see the volume flatten out. That's either flattening out because it's going to rebound, or it's flattening out because it's going to drop. So you don't want to see it continually try to make advances and fail. So if it were to continue to push up, it did right here, try to advance this creek right there, and it kind of failed, and tried again, and then it looks like it kind of held. But ultimately, there's also a support level right here at 2770. So this kind of business, this is just like straightforward. I would say like there's a wall right there. It's simple. It's the logical place to find resistance. If you're going to try to break the stock back down, you would pin it underneath that level. We had been finding to some degree support on it here. So you can see the shift. And this is where I talk about cat ear stuff. It's all built on like liquidity. It's not just a bunch of random doodles that I make or something. It's based on liquidity shifts. And so there's a fairly straightforward pattern right here. It might even be steeper than the way I drew it, but whatever. You get it. So these are possibilities, you know. The shallow S-curve, as I call it, is one where the S-curve doesn't follow through, and it's more to do with, like basically you have this S-curve built out, and then the second part of it doesn't actually go. Either it creates what we call like a spring, in which case this drops low, and then rebounds, and that's like a localized spring action here where it crossed a creek, or it's, well, I guess that's really the only thing. Or it's like an LPS, but that doesn't happen as often. That would be like what's going on right now. Like just not going low again. Instead crossing high and never returning to a new bottom after a phase B bottom. That does happen. It's just not as often. So if we went ahead and found support again high here, that could be really bullish short term. But my expectation would still be that it needs to come up above the way this is building out. It would still need to come up above here, find support, and then continue higher. So there's a lot that would have to happen in order to see this really advance. Support here, support here. Yeah. Support here, SOS here rather. And then an advancement back to the top. It's the only way. And then the possibility of a spring is imminent. It's always there, but could be upon you very quickly. If this fails right now, it would drop low. And then that also lends you to a possibility of, frankly, just a breakdown. So, yeah. So AMC did dip below, but recovered very quickly. So we'll see. Yeah, I mean, that's a divergence. That's a hidden divergence on the 3-minute. RSI came lower, but the price was higher on these two bottoms. I wouldn't hold your breath on it. I would just kind of wait and see. It definitely just had a distributive action right before it dropped. So what I mean by that is if you look here, this tried to advance. So this is definitely a cat ear. You can see it visually. One, and then the flat one is always flat. So this tried to advance and failed to advance back over that middle line. We were just talking about that on GME. GME seems to have held up a little better. So it held the middle and then it tried to advance again. It seems like it's holding and it's trying anyways to some degree to advance here. We'll see. It still needs to kind of make the leap over the cross. If it can't do that, it's not going to advance. It could still be a distribution. AMC kind of failed. It just sort of melted through it. So, and then it rejected on it at 536 and dropped low. So AMC did fill its gap. But, you know, this kind of happened recently too because GME didn't go back down and fill certain gaps, but AMC did, and I don't know. Like the 431. So this could still be a spring action in theory. I don't know. This is a harder one to do for me because of the build out's different. Yeah, that could be a completed S-curve there. If it's not there and it's lower, then it's really low. There's one right there, and then there's another possibility way down here. That'd be like a full-scale break. That's probably the one where you come back and you retest this bottom. I don't know if that's as likely though, but I guess it's there. It'd have to be like now. I don't know. This looks like it might be finished. I think it's complete. You see this? Because the point of this was the rejection, right? So there's the second top. It did reject and it went low. So I think it's done. At least on the short time frame, it looks finished to me. It looks like that's it. Do you see that? That would have been the point of that rejection. So that would have been the spring action, as we call it, if we were seeing it more regularly. This looks weird because it came down strange. But you look at RSI, it's pretty obvious. Like that's where it should be, and it's right where it should be. So the cat ear supposedly is in the right spot. So I would expect, at least on RSI, I don't know about the price action, I'd expect this to kind of find a bottom somewhere. I'm kind of asking for a lot because this is a 3-minute chart. You could easily take this to like the 6 or 15. It's probably going to look like it's not even close to the bottom, but all right, so you get some kind of a cross here and then you go up. Like this would be the first advancement, and this is where you would leave this guy. Does that make sense? And then you should head back up to this one. So wherever that may be. Actually, it's tracking pretty well with this. You see this? This trend. So I think it's going to head back up towards that top if we can see it push over, if it can push over. And if not, there's still a drop possible on a really low S curve. So if we can see an advancement here, I think it's going to move back up to like, I bet it's the same move too. It's probably a parallel. It's usually what we find is these guys build out like really strong comparative moves. So like this will end up being the same as like this, and it'll end up being the same as the move out. I don't know why that is, but it just happens a lot. I think it has to do with the waves again. So my expectation would be that here it's going to go right back up to 545. If it can break. 4-hour MACD looks bearish. Yeah. We'll see. Like I said, don't hold your breath for it, you know. Just watch the chart. This move down seems probable, but at the same time, like if it makes the move up, this is where I think it's going to go. This could be building out for us like a second range on the outside here that comes down. That's a possibility. Meaning like we could be building out like a shorter term downward movement into Friday or something. You know, this way on the outside of this. So we could be building out a creek higher. This could go sideways at 540s up here and distribute slightly lower than where we were over here, and then that could still be going down. Nothing's done until, I told you guys, nothing's broken out until we find support over 548, and nothing's changed there. You know, this has to make some kind of a rebound and then build out above. Otherwise, it's still at risk of coming down. This is just a broader cat ear, you know. So these are paths forward, but the path down is risky too. I mean, you could come back up here and basically go sideways, and you'd be in just as bad of a spot, you know, to come down. This makes sense to me too. So But in terms of like a short-term move, very short-term, 545, if it can get it back above here, it's probably going to go and retest that top area. Pretty likely. When you own millions of shares of the stock, you can lend them out. So they're not playing checkers. They're doing stuff with their shares to make money. If an operator has short interest in it and they want to see it go down at times, then they'll just lend shares out. It's a myth to think that short operators don't own shares. That's completely untrue. They may very well be accumulating for the bigger move that might come up. They might be thinking long term, we're going to go to bring it to 9 or to 15. But in the short term, we're not ready to do that yet. What am I going to do with those shares that I have? I'm going to lend them out. And let the shorts do what they want to do until they get to the level I want to buy up at. It's not that complicated. The myth was the idea that somehow retail could control the amount of shares available. That if retail just doesn't make their shares available, then suddenly there won't be shares available. But that's... I never bought into that. I always thought that was silly. Because it's like the amount of shares that an institutional buyer could get just far outweigh the amount of shares that retail can get their hands on at one point in time. Like, we think we could lock up the float, but that's just not... That only works in the case of the short squeeze itself. Like, it's already in the moment of short squeezing. Then all of a sudden, less share availability becomes a problem. But like in the day-to-day price action, if you're just holding your shares, it doesn't change the price. So like the concept of the squeeze, the buy and hold, that really only matters when the squeeze happens. But up until that point, it's just ultimately you're waiting, because the people that are moving the chart are the institutional traders who are putting millions into it at different points in time, you know. Huge amounts of volume, right? And that doesn't come from retail. So I always felt like it was a bit silly that... I'm not calling you silly, but I'm just saying I always thought it was a bit silly that retail gets really worked up about shares availability. And I'm like, well, yeah, but you and I aren't out there buying $1 million worth of shares, $5 million worth of shares. Somebody said there was a $5 million order last night. Like, okay, that's probably not retail, but even if it was, like, that person could lend out their shares the next day. I mean, as long as they are settled, they can make a few million shares available. It's not hard. So if this thing trades 20 to 30 million per day, it's not hard to see how they could lend those shares out. So we'll see. We're kind of getting rejected a little bit again underneath this level at 536. So if AMC can't go back here, this obviously isn't going to happen. This is a measured move that would anticipate that you could break 536. If you can't break 536, we'll probably head back down again to the creek to see if we can find support. So that would be like coming back down low. I don't know, man. The way this is set up, at least on my chart, it looks like it's possible it could hold. It also looks like it's possible it could drop, but it's making the moves. It's doing kind of what we might expect it to do if it was going to bottom and at least try again. I guess right now my biggest concern is that concept of like we can come up to 545 and then basically chop you know, and just form out like a whole nother side here, like a right side that still drops in the end. Frustrating as that sounds, it's a possibility. And that might be another thing that people have to deal with this week. Yeah, so GME made the first move back up. It moved back up to the wave here, to this top. Makes sense to me that it would do that. Now we'll see if it can find support back down below. It doesn't have to be this low. It just needs to find support above this 2772. Could be right on it. Could be slightly above it. Makes very little difference to me. As long as it finds support up here, I don't really care. Then it can try to advance to the top at 28. MPW moving. Yeah, it is moving. Looks good. I don't know. There's not really much to say about it until it's above that 485 area. But if it can make that advancement, there's a lot of buying pressure right now. Not a lot of sellers are able to make a move here. I think if it can make that advancement, it might be in good shape to build a support. The way I've got it is it's coming back down and back up, and that may have already happened here. So probably be wise to just kind of let it do what it needs to do. But eventually what we would want is some kind of a support here, and that's what you would want if you're a bull. So once we get to that point, that would be maybe more prudent time to be more celebratory. But there's a gap also at like 485. So really gonna watch carefully. It's still danger zone. Like we could have this distribute along 485 and take some time to go back down. You know, like this is not unrealistic. So just keep in mind, like there's lots that could happen. It's not a guarantee that it just breaks above and goes. Once that gap fills, we'll find out. $12.47. Is that Eastern time? That's in like 3 minutes. Yeah. Well, AMC needs to hold here. I've already kind of talked about this a number of times. It looks like a hook. So it can be a hook here locally as long as it continues to jump creeks. But if it fails and drops back, makes a new low, that's bad news. So it needs to kind of hold up above these. I hope you understand what I'm saying when I say that. Like we can come back down again on the other side of a creek jump. That's fine. This is a tiny little M cross here, but then you need to have a higher low. You can't come back up and reject immediately and then head back down again and expect that to end particularly well. So really needs to hold support. I don't see AMC as particularly bullish or bearish today. It looks a little more bearish with the up thrust early in the morning and then sliding back down. But it is just checking the creek right now, so unless it comes below here and rejects below here, I'm still going to maintain that it could come back up to 540s today. If and when it dumps beneath here and holds beneath here, that's different. Then you've re-entered like the resistance down below. You'd be in trouble. So you'd be in danger of serious distributive action below here. We're not quite there yet. I don't know, man. And I've got a million lines drawn on GME, but it's just a fan. It's a pretty straightforward. It's up again. So at the end of the day, if GME is going to run, it's going to come up above this level at 2810, and then potentially from there it could advance. If it can find support, it should advance at least back to near the top. But there's a level at 2828 where we could see it get pretty stuck. So just keep that in mind. And evidently, there's a big sell-off level or a big buy-in level at 28.20. So right up here. So I think there's a kind of a wall there. I don't know. IWM has just been chopping. It's kind of been doing this every day, though. It's like made an advancement and then just sort of chills out. Makes an advancement, chills out, makes an advancement, chills out, makes an advancement, chills out. This one looks a little more pointed, I guess. It kind of looks like it's trying to do something else. 1, 2, 3, 4. So I think it's a 4 top. I know it's weird because it's rising, but I can see the deep movements. This is the deepest. You see that? This is like a shallow-esque, little shallow curve, and then this is a really deep one. It's kind of interesting. So that could be either the middle of an S-curve, in which case you might see this kind of advance, go ahead and advance back to the top. So it'd be like the middle point, and then you see a big push up. That might make sense. Or, so that would advance to the 227 mark. That seems possible. Or it's distributive, in which case probably drops back down about the same amount as it was when it entered. So that would be more in the case of, again, it's hard to say that because of the nature of this, but it'd be more the case that this would come down like to here or something. Actually, that looks like it might be built into it by design a bit. Be back to like 216 or something like that. That works well because if you look at the this as a pattern of like top to bottom, you can see that the setup might favor that kind of a move. It's a bit of a widening, and then it's not really much of one, but just in terms of this low trend, like where does that point you to? The lowest trend here on the very first setup, and maybe even that second hit in the middle, kind of points you low. And then if you look at the parallel, that's the same move. So if it's a distributive action, it pops up to like 223.90, and then it drops all the way back down to 217. If it's kind of more bullish here, I think this is just an S-curve. I think it's going to make its extension up finally to whatever top. There's some other trend I've got on here. I don't really know what that is, but it could be pretty high. So I think it's a do or die kind of moment for this. The way it sets up on the top there makes me kind of curious. Might be like a quick up movement and then drop. It doesn't even have to be that high. It could be very, very minor. Coin posted a pic of a cat with tomorrow's date. Well. So wait, that's what the Pult guy put up was a cat? So he's making an announcement about an announcement, which is just an announcement for some other announcement. This is ridiculous. Oh my goodness. All right. Well, RSI is pointing down here quite heavily. This price has been rising. This is a short time frame. It's done this like every day. But I think that IWM might finally be making a turn down. I know I've said that a couple times. I genuinely think it might be, though. It's hard to say. We'll see what happens here. Maybe. We'll see. Like, I suspected it would go higher, but it just barely wicked above, so sometimes that's all it takes. I don't know. We may still need a flush. I say I don't know a lot when I don't know because I'm like not positive about what it might need to do, but this looks like it came above slightly. So that could be enough. We'll see. It was something about BuzzFeed and now it's halted. Well, that's great. I'm glad he's having fun today. But yeah, this could be a distributive motion starting. There's a support here at 220, so we'll see. I'm just looking at this. I think it's a 4 top. 1, 2, 3, 4. And that usually is like the cat ear section. So I'm seeing a possible pullback to like 218 or 216 rather, that gap. If it can continue, I think it's just an S curve. So if it can continue, that's obviously in a bullish model. Then I think you're going to see it potentially come up. I don't know if it's going to go beyond. It could do both, really. It could be both of these. But I think it could go up to maybe that 227 mark. We'll see. So where are we at with AMC? It's back up to 537. That's good. Doing well. Which means it made the advancement over 536, which is good. There's another creek that it lost, which is this yellow guy that I've got on this chart. It's about that high of resistance that was made, so it's not, I don't really have it drawn perfectly, but it's there. Thereabouts, you know. BuzzFeed is flying. Now, I'm sure if he's doing stuff with it, something crazy. I'm not touching it. I don't care. I don't know the guy from some stranger on the street, so. Activist position. Well, let's see what happens here. You know what I'm starting to see, guys? Remember how I was just talking about this on the... This is good. You see this? I think we're seeing a micro iteration here. I think this is a good sign. Up, 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 up. I think this is good. Well, I don't really like BuzzFeed anyways. I don't think I've looked at BuzzFeed in like 3 years or more, but never really liked it. So I don't know what the deal is. 1, 2, 3. 1, 2, 3. I think this is positive. We were just talking about this earlier, this walk up. Because we were mentioning that it did the same thing before the build out. It is. It's doing the same thing. This is it right here. Here, here, here. This is really good. We may not see the drop in regular trading hours. We may, but I think it's the same concept here. Here, here. We're doing the same thing over and over again. So 1, 2, 3, 1, 2, 3, 1, 2, 3. So as we're retreating away from the top, we're actually doing the same pattern. See that? Here. Yep, there it is. And then here. I don't know. Maybe it's already broken, but it got there. And then this is the same pattern. It's just smaller. It's really just M crosses. I think it's just trying to find a bottom. Because really, if you think about it, it's just buy up, because these are all right side. Creek crosses, buy up, so just waves, 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 waves. So if we got one more down low, oh, I want to say we need to go down there, but we may need to do one more. Really small version of it. Well, there you go. RSI panned out. Booksy, did you get your target? Not yet. I said 540s. It only came to 538. RSI looks like it kind of took off without the price, but it came back up. Wave analysis works pretty well. You do it right. It's not always perfect, but it's pretty good. So I think it's gonna try, I don't know, maybe it might not get above 542 because that's a resistance, but my estimation was that it would come up to approximately 545. We'll see. As soon as it hits 540, I'd be like meh about it. Is that if you can see, like 540 has acted as a resistance here, this whole little pocket. So it'd have to deal with all that in order to get up high. Yep, and there it goes. It pushed above the top here, then it's retreated. It's kind of a weak push, but it's got to find support on a creek, and I didn't have that information at that time. So I think it's like there now. So I could have like a pretty deep like throwback. If it wanted to continue, you'd have to find support here around 2485. Looks pretty good though. And it's pretty close to what we were expecting. Still, no run until you're up above here with some support. So right now, what it looks to me is that it failed to hold that. So it looks like it advanced above it and then failed to hold it. It's dropping it now. So it dropped right off of it. So again, needs to see there's kind of weakness here in the RSI. It's coming down. It needs to see a support build and an advancement that's stronger. Yeah. Speak it into existence, I guess. I don't know. Not bad. I'm a little worried if it doesn't get across here, it gets stuck. I talked about sideways. I'm a little worried it gets stuck here, and then you'd end up having to evaluate a different kind of ending, because if it makes the cross like we think it would, and then it gets stuck, sometimes this can end up being really bullish because it could just be like an SOS with a backup, and then other times it ends up being like a UTAD where you come back up later. And you know, I really wish I could be better at understanding the main differences aside from volume, but usually I just have to watch it play out, because it could, again, if it's advancing, it just jumps back over this and then it goes, and if it's not advancing, it gets pinned beneath it. That's really the only difference. I mean, and if you're just looking at movement alone, it already tried to advance. It pushed the creek a little bit, pushed the resistance, I should say, not the creek, up like a slight bit. So next time it goes up to the top, we need to kind of see it make some moves. We got to get above this mark right here, or we're not going to move anywhere. So Ichimoku clouds about to break the bullish on the 3-minute. I don't know Ichimoku, so, but I trust you. So Zach says that Ichimoku clouds are about to break bullish on the 3-minute. Good. So far, so good. This really hasn't done anything overtly negative today. So far, it's been fairly consistent. I just gotta make sure that you're aware. This is like my main warning, I guess, about this price action right now is like this is still a possible. We call it like a cat ear, but it's still possible because even though I talked about it being lower, there was a possibility that it builds lower and it just S curves down. That didn't happen, but it's retesting the same levels. So you could still see it reject if it distributes here. I'm not seeing any kind of sign of weakness because we made a higher low after that first bottom. That's why I'm a little more optimistic right now because I'm like, well, we made a higher low and then we advanced again and we made a higher high. So my expectation would be that this kind of builds out along this creek and then maybe we do need to come back and check 27 again, but they should just go. Like that would be a really strong push. My cautionary tale though is that there have been times where this doesn't end well because you can still present as a sort of a strong range and then distribute over the top. So even if we came back down, I would look for support at 27.72 and then I would look for ultimately I would look for support at here, let me show you. Probably can draw it now. It wasn't there before. Usually there's a line here. There's a lower one too, but that's what I would look at is like finding support here and then advancing or just advancing now. Just find a support and advance presently. Either way, these are your bullish choices, right? But I would be really careful about this as a top because if this forms as some kind of a top action and it fails to advance, you could be in just another longer term distribution. And then this comes back into play. This is the bigger jump right there. This comes back into play as a possibility for downside. So if it fails to advance here, it's just a giant wider S curve. How long do you have to play these kinds of things out? Well, you play it until it's not in play anymore. So if it makes another advancement and then it breaks beneath this creek, it's probably not looking good, you know. You'd be able to tell pretty fast. So regardless of what happens, you need to have support build out above here in order to advance. Otherwise, potentially just downside locally. It's just the way it's built out. There's an ascending, I don't know what this is exactly. I think it's a creek, but I think it's this guy. There's one on the top. I've got kind of this orange pocket right here on this chart, and I think it's this second parallel up that we're hitting right now, right there. So you could get pinned here for a bit. It could reject here, I guess. But the price hit 540, yeah. Yeah, just for a second. Okay. We'll see. I think the fuller move was probably meant to go a little higher, but if it only goes to 540 and stops, it would be sensible all the same. So we will see. I think with that, I'm going to take my lunch and Maybe we'll get some good action while I go to lunch. Maybe we can see something explosive. But I'll be back in an hour or so, hour and a half or so to wrap up the day. So appreciate you guys coming out. Hopefully it's a good day for us. I think it could be a really big day for AMC and GME. But for now, we're just gonna wait to see how these things play out. I'm not gonna leave the chart on today. I've got some other stuff I want to do, so I need to turn it off. But I'll see you guys after a little while.